Buenos dias. How's everyone doing today? Hopefully you guys are great. Hopefully you're excited for the day. Ready to get some work done. Moon. Insea. I'm not sure how I'm saying that. Bruce T. Always good to see you. Gary, Ron, Sophia, Joel, Walter, Donovan, Jim, GWC, Vittorio, Gary, Finman. I love it. We got all the people in here. Tim, good to have you. Helen Lou. D. Mark G. Luciano, K-Dog, and John Novak for the win. Awesome. Great to see you guys today. Hope everybody's doing well. Man, I'm excited about the day. A lot of movement going on. Guys, just a reminder, crude oil is rolling. Crude oil is in split volume right now, which means that as that contract rolls, half of the world has decided to stay on the September contract, and the other half of the world has made the decision to go over to the October contract, which means that there's a 50-50 on the volume there, guys. So if you roll, cool. If you don't, cool. NT, I didn't get the notification either because I don't think it is officially until the 23rd, Jose. I went ahead and rolled to 10. So if your charts don't match mine, because they're split, and we're only looking for patterns, right? I'm only looking for patterns anyway. I'm going to be on 10. So if you're on 9, just know that we may not match up because it's different contracts, because it is split. And typically when the contracts roll as we get further into the day, the volume switches more and more. So guys, this is the one day, if you're a crude oil trader, this is the one day a month where if you recognize that your patterns don't seem to be following through, it's because half the people that help them follow through are missing. So Jose, just be aware as you're going through. All right, what are we going to do today? You're welcome. What do you guys say that we talk about rules? We learn to read some charts, right? Wells, did you get my message yesterday? I hope so. Not yet. I sent you a private message, but here, let's do this because this is a leftover from yesterday, guys, and I want to make sure. I always want you guys to get everything that you need. And you know what? I have to figure out where your picture was. I thought I sent a picture of your picture to you, but I missed it. I'm going to scroll up real quick, Wells, because I don't want to miss this lesson, because the picture that you posted in the room was awesome. Everything about it was great, but there was one little thing that we could have done to make life easier on you. I just need to figure out where it went. So many pictures. All right, Wells, I'm going to have to find another time, or if you want to repost that picture today, I'd love to discuss it. There it is right there. So guys, this is how we're going to start the class real quick. I missed Wells yesterday. He had to go early. Actually, it was. So Wells, this is pretty cool. No, this was awesome. You had a pivot stop out at the bottom. And guys, this is what we're going to talk about today. You had a termination condition that created a full reversal. That's an amazing look. That's a great read. And then you had odds favorable momentum. Smalls above the large are wide. They're angled in the direction of the trend. Once again, this is a fantastic look. You did get into a termination condition there, but before that termination, your entry right here, Wells, the only thing that I think you could have done better on this trade, and this is why I wanted to share it with you, because there's a tremendous amount of praise coming on this one with the trigger read, with the direction, with the momentum, where it's coming from. Wells, your highest probability chance for success to make the most money came from this pullback to support inside of favorable large triggers. And that's going to be rule number 3 that we talk about today, being able to reduce your risk and maximize your profit potential. And what it does for you in this particular trade, Wells, is this rule number 3. And guys, we're going to talk about all the rules. Don't you guys worry. It turns this 9-tick winner into it doubles it pretty much. And it reduced the risk by over 9 ticks as well. And this is very normal for new users, kind of getting in a little late or a little bit before the pullback. And as we go through and we talk about the rules for the high probability trend trade, and a lot of people are looking for this momentum style trade, what you're going to realize is that the market goes up and down, and by using a smaller, faster chart, you're going to be able to take advantage of those. And that was the only lesson that I wanted to share with you yesterday. It was a great read. Everything was going awesome in this trade. Yeah, and just an opportunity to make a little more and risk a little less. So great job on that one. I was like, I'm not going to let him get out of here without getting that feedback, because now you can go into the day and you can say, all right, I'm going to work on rule number 3. I'm really going to focus on those entries. And guys, that's what we're going to do today. We're going to talk about entries for a little bit. And we are going to talk about reading trigger lines, and we're going to talk about understanding termination conditions. And what we're doing is we're laying down this foundation. We're taking a foundational approach to education. We're going to be in kindergarten today, and we're going to start basic, and we're going to keep it simple. We're going to keep it focused. And then John Novak, guys, I want you to look at these pictures that he posted in the room. John Novak is letting you guys know where you're headed. And he's going to let you know, and he's showing you that when you begin to get these reads in, when you build this basic foundation, the world is your oyster, guys. We talk about one very basic trade in this classroom for the first hour, and we talk about a high probability trend trade. And when we talk about that trade, we're talking about a trade that has every advantage on every chart. And we do this as an effort to teach you to read your charts, to get you to the point to where you can understand the information that these indicators are giving you. So we're going to start basic, and then we're going to go advanced, and it's going to be an awesome day. I'm excited about it. But before we do anything, and Dr. P just put it in there too, I check my forexfactory.com. I always make sure that I'm not trading directly into news, because news can create kind of an erratic movement in the market. It can make it spike, it can make it jump, it can make it change directions without any real notice. So I'm not trading the news. This morning at 8:30 a.m., I wasn't worried about what the unemployment claims were, and it didn't matter to me whether they were higher or lower as a trader. What I did know is that somebody may have been waiting for that information to make a decision, and that decision can make the market move erratically. So every morning I check forexfactory.com. I'm making sure that the news is there, that everything, that I'm not trading into it. And then everything that I talk about each and every day comes from the education page right here from the Nexgen, t3.com/education. And guys, this education page from the internet is mirrored on your Discord channel. When you go to the Discord channel, all of this great information is right there as well. So the resources are there. This is learning to fish, but I'm going to give you a fish all day, every day. And we're going to talk about first the path. Becoming a confident trader, understanding what it is you're looking for, and then making decisions based on what you see. And the step-by-step of becoming a confident trader, and guys, this is what John Novak just posted in the room. You can't buy experience, right? You can buy kick-ass software and better education. And as long as you keep participating, as long as you keep practicing, you're going to get the experience you need to be a 100% complete trader. And that begins with posting your trades in class. This is the participation that John Novak's talking about here. And Wells, we just had a great example, right? You posted a trade and everything looked beautiful on the chart, and we were able to have a quick conversation to be able to talk about just a way to do it a little bit better. And Dr. P, I just saw your message. I'm going to do a quick reboot on my video. This worked awesome yesterday. What I found was Discord was a little wonky yesterday. And I can see it chugging on my end. So there's the reboot. Is that a little better? Is that a little more clear? I hope. Yesterday that was the fix. Hopefully that one helped a little bit today. Joel's good. Not really. Watch this. Let's try a different setting, because it's important to me that you guys can see what I'm doing. Let me do a quick little... I'm going to turn down my screen quality just a little bit to see if it matches up with what you guys are doing a little bit. How we do there, guys? There's a little reboot. Better? Awesome. Cool. Thank you for letting me know. Don't ever sit in silence. If you can't hear me, if it's a little fuzzy, always let me know so we can get there. Um, so guys, post your trades in class the same way John Novak just posted in class. Give me everything that you're doing. Talk to me about it. Let me know why you did, what you see, where your entry was. Um, and John's going to go off and take some of these to the advanced class right now. So remember, after class, you can go to the advanced room and you can take a look at all these great things that John Novak's talking about in the first hour here and apply the lessons that we're doing on the morning to what you see on his charts in the advanced trading room. But for the new user, we're going to talk about posting your trades in class, and then you're going to be able to track all of your trades in this trading sheet, the one that Nexgen provided to you. It's going to be in your Nexgen study picks folder. And if you don't feel like searching, and guys, I kind of hope that you don't sometimes, there's a copy of my spreadsheet. But this spreadsheet becomes a trade journal for you. And everything that you do during the day, you can take a picture of, right? I took this trade, and this is how it went, and this is what I was talking about, and this was my trade, and these were my 5 trades for Monday, and these were my 5 trades for Tuesday. And the goal is that you're able to take these trades, but most importantly, come back to them. Come back to them tomorrow and look at what you did today. And what did you do today? And guys, you know what I did yesterday? I fought the trend a couple times yesterday. And every time I fought the trend, every time I formed an opinion about what the market was going to do, it kicked my butt, right? So I woke up this morning and I said, don't fight the trend, silly. It didn't work out for you. So I'm identifying what worked, trading with momentum, direction, all that good stuff. What didn't work, what felt easy, what made me nervous. And I'm gonna start my day off with this clarity. This is what I need to focus on today, guys. This is what I need to ask for help with today. And this is what's going to set me up for success. And then everything that we talk about is rules-based. So every time that your rules are met, every time you take a trade that fits those rules, that give you those advantages, you can come to the favorite looks section and start posting all of your pictures in here. This is what it looks like when my rules are met. This is what it looks like when the advantages are had. And what you'll find is that through this repetition, you're going to begin to see more. Through this repetition, you're going to see more and more patterns, more and more situations, and it's going to create this awesome clarity for you. We're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade, laying that foundation, giving you the ability to read your charts. And that's exactly what this high probability trend trade that we talk about in the first hour is going to do for you. It's going to get you to a point where you can understand where the market is likely to continue, where the market is likely to go, as well as where the market is likely to stop. And it's going to be this ability to read your charts that it provides. It's going to set you up for future success. That's going to get you to the point where you can see more and more on your charts and recognize your rules being met faster and faster. Simulation needs to happen on your end. Get in there and pull the trigger on that simulator. Practice these rules. Practice the correct rules. And every time you practice something, win, lose, or draw, go ahead and post it in the room. Share it with me. Hey, Mark, this is the trade I took. I may have misunderstood the lesson. Let's talk about it. And what we'll do is we will talk about it. I'll open up your picture and I'll say, hey, look, there's the picture. There's that great termination. And then you get in, and if you just would have waited for it to close the gap right up there to the large triggers like you did, it creates an opportunity for success. John Novak, you'll be glad to know that I took the exact same trade at the pivot stop out right there, right before class, because I used my chart reading. I used my recipe for success. I used my ability to read the charts, and that's what this high probability trend trade is going to do for you guys. 90% of your day will be reading your charts, waiting for advantages. 10% of your day is going to be pulling the triggers without hesitation because the advantages are in place. So we're going to talk heavily about the rules. You're going to practice them. We're going to talk about them. And you're going to take a million pictures and drop them in class, guys. And that high probability trend trade, excuse me, the one that's going to teach you to read your indicators, is only 3 rules long, guys. It is 3 rules, that provide 3 advantages. And the 3 advantages are the recipe for a trade for the new user. The three advantages are going to teach you to understand these very basic concepts that will take you on to the next level. A trade is nothing more than momentum, and that's that trigger line reading. A clear path, that's going to be your study of termination conditions, those areas where the market's likely to stop. And then an entry area, being able to refine that broad stroke of a brush down to one simple spot where you can get into the market. And this happens on only 2 charts initially. For the brand new user, 2 charts are going to give you everything that you need. You're going to be able to understand the direction, the momentum, and the areas. And this large chart is a broad stroke of a brush. It's taking 1 bar on this higher time frame, and it's giving you the first 2 advantages that your rules provide: the advantage of momentum and the advantage of a clear path. It's telling you that the market's triggers are its absolute strongest, the momentum is its highest, and there's nothing between you and your target. When you have these advantages in place, all you're going to do is go to that smaller, faster chart. You're going to refine the broad stroke of a brush that the large chart provides. And this is what Wells and I spoke of this morning. We're going to refine it down and pinpoint that place for the entry so that you can minimize your risk and so that you can maximize your profit potential. And rule number 3 will be your entry rule. So 3 rules, 2 charts. Guys, let's embrace the idea of simplicity. Let's focus on the best of the best first so that it becomes easy. And then from that foundation, you and I will spend the rest of your trading careers working on management, working on that next trade, working on those other entries to take advantage of the moves and the patterns in the market. But we're going to go to the tutorial section. And we're going to click on, and we're going to start with rule number 1. And rule number 1 is your trigger line reading. And rule number 1 says that we must have strong triggers. And before I ever look for strong triggers, I just want to be sure which direction the market's trending. And this is a very simple lesson. If the background is green, we're in an uptrend, and we're only looking for rules to be met for high probability trend trades long. And if the background is red, we're in a downtrend, and we're only looking for rules to be met for high probability trend trade short. And guys, I can tell you from experience, this is one of the easiest ways to keep yourself on the right side of things, simply trading with the trend. But rule number 1 says that we must have strong trigger lines. We must have the advantage of momentum. We're going to use those T3 trigger lines, guys, those small triggers, which are the solid lines, and those large triggers, which are the dashed lines. And we're going to let them tell us that we have the momentum we need. And it happens when the small triggers break above and away from the large triggers. Both should be wide. Both should be angled in the direction of the trend. Good morning, PFI. That's all right. Listen in. If you have questions, drop them in. I know you can't post charts, but I'll still try to answer your questions. Small triggers above the large. Both are wide. Both are angled in the direction of the trend. Visually, this is what a strong trigger line looks like. And this strong trigger line means that the odds are favorable for the market to continue in the direction of the trend. This is giving you the advantage of advantageous momentum. And it starts when the separation begins, and it ends when the small triggers return. And you see it again over here. Small's below the large in this downtrend. The large triggers are wide. They're angled in the direction of the trend. And it's that separation. I want you to think of scissors. When scissors open, they're ready to cut. They're ready to get some work done. When trigger lines open up and separate, you're ready to get some work done. And this strong trigger line is the most favorable look for refining that 1 bar on a large chart to a pullback to Fibonacci support on a smaller, faster chart in an uptrend, or to Fibonacci resistance on a smaller, faster chart in a downtrend. And you'll see it on the large chart as 1 bar with a tail or a wick. This 1 bar is 15 to 30 bars on a smaller, faster refinement chart. This is your entry, and what you're going to be able to understand is how to get in at the bottom of that tail. You're going to be able to pinpoint where it's likely to happen, and this becomes your entry for the highest probability trend trade long and the highest probability trend trade short. When those small triggers return to the large triggers, this is a weakening of the large triggers. Guys, this is where your advantage goes away. Good morning, Ziva. Nice to see you. When we weaken those triggers, anything can happen up or down. One creates odds favorable momentum. The other one robs you of that momentum, and anything can happen. And you're going to see these weakened triggers When the market's about to turn, you're going to see these weakened triggers when maybe those pullbacks are too big to trade, and that loss of momentum kind of stalls the market a little bit. So we're going to commit to this odds favorable. And guys, it doesn't happen all the time. Odds favorable momentum is happening right here. And the market trends down. We get those anything can happen triggers, and notice that it kind of is right before that turn. And this is without the benefit of Fibonacci, guys. This is only trigger lines. When they're their absolute strongest, the market continues up, they weaken again, and the market turns. And then they go down, and then we get this indecision. And when the small and large don't agree, when the background doesn't agree with the trigger line color, as this is your key to sit on your hands. We saw it yesterday in crude oil, and most of you stayed out of the indecision. You stayed out of that fight between buyers and sellers until the advantage was present again. New users love to predict what the market's going to do. New users love to tell themselves, if I guess which way it's going and I get it right, I'm going to make a lot of money. But the flip side of that is if you guess wrong, if the momentum's not there, well, you may lose a lot of money, right? And we're trying to avoid that. The goal of trading is to make money. So guys, strong triggers should always lead the way. The large chart leads the way with those strong triggers, giving the advantage of momentum. Could I get a Y in the room if everybody's comfortable with this look, guys? All it is a separation between the small and the large. Good morning, K-Dog. This is it. New users, if you're trying to find those advantages, that's it right there. If is a dangerous word. Opinions are an expensive accessory. So when we have momentum, we need to make sure that there's absolutely nothing in our way. We have to make sure that we have a clear path. And a clear path comes from termination conditions being false. And a termination condition is a Fibonacci-based indicator that may reverse the market. It may create a bounce that's untradeable. It may reverse it completely. It might make it stutter. Or, as you're going to learn as you read your software, really strong trigger lines may smash right through it. But we have to be able to recognize where those deep pockets investors might be reacting, where they may be taking profits, where they may be creating a battle for supremacy. And that happens at these areas. It happens at red Fibonacci resistance. It happens at blue Fibonacci support. It happens at these yellow 1-to-1s, these divergence high lines, the magenta line that prints from a pivot where there's a loss of momentum, or these divergence low lines, these cyan lines that print when there's a loss of momentum at a pivot. And all of these areas have the power to reverse the market. But we're going to do a simple little, litmus test, if you will, to see if these areas are likely to do it. And it's a two-part process. And the first part of that is that these dynamic Renko bars, which I'm going to refer to as price. Price reaches an area. Price trends down and reaches Fibonacci support, that big blue line on your chart that you knew about for the last 3 hours. When price reaches support and absolutely none of your trigger lines break through that area, get below that area, this is an area that may reverse the market. This is an area that may create an untradeable bounce. This is an area where people with a lot more money than you are going to make a decision, whether they want the market to continue down, or in this case, whether or not the buyers are going to take over and use this as an opportunity. The advantage and the best part about being a Nexgen user is you never have to get caught up in that fight, because if price reaches an area and none of the trigger lines break through, well, then it's not a trade anymore. Rule number 2 isn't met. You no longer have a clear path. Areas break. Areas break all the time, and they typically break with that odds favorable momentum. We will consider an area to be broken. We'll consider that path to be clear. And if we go through the whole process here, price reaches the support, all the trigger lines are above. But when both your small triggers and your large triggers get to the other side of an area, we consider that area to be broken. And when that area is broken, the path is clear. So for the brand new user, it's really just a matter of 2 options. If price reaches an area and absolutely no trigger lines break through, then rule number 2 hasn't been met. The path isn't clear, and you just need to sit on your hands for a second. Just relax, take a sip of your drink, text your wife, text your husband, and wait to see what the market's going to do. If both the small and the large areas break above resistance, resistance begins to act as support. The area is broken, the path is clear. There's that odds favorable momentum, and there's one of those potential entries for that high probability trend trade, for that continuation now that the area has broken. So guys, first 20 days, keep it simple. Broken or not broken, right? And it's a pretty easy recipe. And it just revolves around a comparison of the trigger lines in the areas. Here, the trigger lines break through the area, and we get a pivot, and that pivot has that loss of momentum. It creates that divergence low. This on its own, because the triggers violate that area of support, this is not a termination condition, guys. It may be a little overrun. But we're not sure in the moment because the trigger lines begin to break through the area of support. We can see that there's a loss of momentum because the cyan line prints all the way out to the right. And it's when price comes back and reaches that divergence low and the trigger lines remain above. Well, now we have a termination condition. Now rule number 2 isn't met. And we call this a pivot stop out of a divergence line condition, right? Of a prior divergence line. And pivot stop out is going to be abbreviated in class as PSO. Well, a pivot stop out's a termination condition. And if this termination condition creates a full reversal, we're going to call it a strong bottom if it's coming from a low. And you're going to see these pivot stop outs at lows and highs, and they're very powerful, but they become more powerful still when they correspond with Fibonacci areas. So this is your reminder that 90% of what you do during the day is reading your indicators, waiting for the advantages. 10% of what you do during the day will be taking those advantages and turning them into a high probability trend trade as a brand new user. When price comes all the way up to Fibonacci resistance and the trigger lines remain below resistance, that simple recipe, that's your giant red flag. Don't take that next long trade. Don't hope that the area breaks, right? Give yourself just a second. Let's see what the market does. In this case, the market pushes all the way back to support. All of your trigger lines remain above support. Once again, we're pumping the brakes. We're sitting on our hands. We're saying, okay, I can't go long into resistance, but I can't go short into support. There's nothing for me to do right now. Let's see how this plays out. The buyers take over and they push right back up to that divergence high, right back up to that Fibonacci resistance. They overrun a little bit, and then they start heading the other direction. Now we have a pivot stop out of a divergence high. It corresponds with Fibonacci. It adds power to that top. And when this termination creates that full reversal, gives you that odds favorable momentum, and then there's that tail, that little pullback that we can look for as a potential entry. This becomes your highest probability trend trade. We're going to call this termination condition from a high a strong top. So we have strong tops, we have strong bottoms, and this becomes the precursor for the best trade that you can take, guys. Strong tops and bottoms create advantages. When price trades all the way to these 1-to-1s, none of the trigger lines break through, so we know that we're not taking any more trades short, even with that odds favorable momentum. And when this termination condition, look at the indecision, look at the fight between buyers and sellers. This is normal at Fibonacci. It happens, it can happen. And rule number 2 keeps you safe. It keeps you out of that fight. But when this termination creates a full reversal, when my large triggers go from red to green, my small triggers get above them. And notice that both the small triggers and the large triggers get above that area of resistance, and it begins to act as support. My small triggers are outside of the large triggers, albeit barely, but we do have that momentum, and the path is clear, and there is your highest probability trend trade, guys. This is your focus for the first 20 days, is nailing this entry so you never miss that best trade, because that best trade is the one that runs. That high probability trend trade that happens after a termination condition is a trade that typically wins 70 to 80% of the time. It's a trade that creates confidence through the memory of success. And it's the trade, the 3 simple rules happening on only 2 charts. It's the trade that teaches you to read your indicators, that sets you up for future trading endeavors. So I'm going to ask the room, and I always ask the room, and I love it when you guys participate and give me a why. At a high, price reaches the area. If all the trigger lines remain below, we've reached a termination condition. No more long trades. Is everybody comfortable with the simple recipe? Price reaches the area, no triggers break, no more trades into that area. Let's wait and see what happens. And the same is true from a low. Price reaches this area. Absolutely no trigger lines break through. We're not taking the short trade. And if that high or that low creates a full reversal, we're going to call it a strong top or a strong bottom. And that strong top and strong bottom are the precursor for the highest probability trend trade that you can take. Mark G, thank you for the why. Sometimes the market turns without a warning. Sometimes the market appears on the large chart to simply change its mind. All the triggers are through, the trend is down, and the market goes up. The background is green, the momentum is favorable, we haven't reached an area, and the market goes down. I'm going to show you one more termination condition, and you're going to be able to recognize this on your smaller chart, your faster chart, your refinement chart. And you're going to see change on a small chart that you can't see on a large chart. And you're going to do it with 3 divergences in the same price range. It may terminate the trend. 3 divergences on a smaller, faster chart is a termination condition. And this will have you pumping the brakes, saying no more short trades if it happens. 3 losses of momentum. The 3 losses of momentum becomes more powerful if your small triggers work their way inside of the large triggers. We get those anything can happen triggers. 2 visuals letting you know that the momentum in the move is stopping. And then when that third pivot is higher than the low from a low, or higher than the previous from a low, or lower than the high, or the previous from a high, now we have a head and shoulders pattern, and it adds even more fuel to the fire. So you're going to see this look from a low on your smaller, faster chart, or this look from a high, when that larger, slower chart may be changing direction. And it becomes an opportunity for you to avoid taking that final long trade or that next short trade and waiting to see what happens. And you're also going to use these 3 divergences as a management tool. When you get great at your entries, when you're in at the absolute best of the best spot, guys, these 3 divergences are going to let you see when that change is happening in the moment. And you'll be able to recognize these 3 divergences. You'll be able to exit your position. You'll be able to preserve your equity, keep the powder dry, so to speak, and then move on and wait for that next trade. This is the only termination condition that I'm giving any credit on a smaller, faster chart. Anything else that happens are going to be large chart terminations. Anything else that I'm looking for is going to happen on that bigger, slower chart. That's where I'm going to define my direction. That's where the trend comes from. That's where the momentum is going to be defined with those T3 trigger lines. And that's where the areas for termination conditions are going to be established on that bigger, slower chart. Rules 1 and 2 give me those 2 advantages. The advantages of momentum, the advantage of a clear path. And once those are present, let's figure out how to take advantage of it, guys. Let's move to that smaller, faster chart. And let's embrace rule number 3. And rule number 3 says that we are going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that's counter to the underlying trend. A pullback means that when everything is going up on the large chart, I want that small chart to push down. When the large chart gives me direction, when the large chart gives me momentum, when the large chart gives me a clear path, I want these yahoos on the small chart to give me a little shove back to an area inside of favorable large triggers. So rule number 3 says that we're going to use a limit order to buy or sell at an area inside of favorable large triggers. We're going to define favorable large triggers for you guys first. It means that your small or your large triggers, the smooth large triggers on your 5-1, those are your 5-1 large triggers, and your synthetic triggers, those kind of stepped looking triggers. They should be trending one on top of the other. They should be overlapping, like 2 snakes riding piggyback. Because when these 2 sets of large triggers work together, when they're one on top of the other, it's going to create your smallest window of opportunity. And your window of opportunity is where your trade is going to originate. It's where the market's most likely to continue. So the tighter these triggers are, the smaller that area, the less risk that you have. So embrace the idea that these synthetics and the large are going to give you that window of opportunity. And the tighter they are on one another, the smaller that window becomes. So let's take advantage. Let's figure out how to predict where that tail is most likely to happen on the large chart. When everything's up on the large chart, the trend is up, momentum up, the path is clear. This is the look on your smaller, faster chart. You should have strong triggers. Your large and your synthetic should be up like a shark about to breach. And all you're going to do right now is make that decision. It's time to take a trade. It's time to look for an entry. So you're going to identify your areas. High probability trend trades always come from lines on the small chart. And it can be fibs, it can be a mid-band, or it can be yellow 1-to-1s. And I'm typing that in the room for you right now. Fibonacci support for a long trade, Fibonacci resistance for a short trade, a green mid-band for a long trade, a magenta mid-band for a short trade, or these yellow 1-to-1s, which will remain the same color no matter what happens. Everything says up. I'm identifying my area. My large and my synthetics are coming up. And my rule says that I'm going to buy a pullback. I'm going to buy a small retracement in price. That retracement in price begins with a reversal bar on my smaller, faster chart. This reversal bar is not your entry. This reversal bar is your cue to establish your window of opportunity, that point where the market is most likely to continue. At the time of this reversal bar, I'm going to identify my areas, mid-bands, 2 forms of support, and 1-to-1s. And they're going to be inside of those favorable large triggers that are coming up, that are coming strong. Guys, if your mid-band is a tick or 2 above those triggers, the triggers are going to catch it. If your support is a tick or 2 above those triggers are going to catch it. As the market pulls down, the moving average comes up, and they create this collision course. So for a long trade, your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. For a short trade, if the rules are met, it extends from the lowest point of resistance to the highest point of resistance inside of those favorable large triggers. And this becomes the point where the market is most likely to continue. And this is where you're going to activate your limit order. You're going to wait for the market to come to you right there at the high point of support, a tick or 2 above, and you're going to wait. And that market's either going to come down to you, or it's just going to run off into the distance, in which case it's not your trade. Not going to chase trades because the methodology is so sound that we don't need to, guys. So when the reversal bar prints from the highest point of the triggers to the lowest point of the triggers, let's make that a box. And then my trade comes from, my window of opportunity is created, and I'll refine it a little bit, from the highest point of support to the lowest point of support inside of favorable large triggers. And that's the area where it's most likely to continue. Your limit order goes right at the end of this area, 79.21, right at the top of that window. And if it reaches it, you're in a long trade. And you're in a long trade with the advantage of momentum dictated by the large chart. You're in this trade with the advantage. Playing Chambers Bay today? Awesome, Paul. Hit him straight. You're in a long trade with the advantage of a clear path that has been established by the large chart. And now you're in a trade with the advantage of an entry area coming from that point where the market is most likely to continue, that was established through recognition of the areas of support inside of favorable large triggers. And if that market pulls down to the top of the window, you're long. And you're long at the top because of the momentum. But guys, it may go to the bottom of that window. It might bounce off of the lowest point of support. We don't know if it's the top or the bottom. We've only created a window, and we're not willing to miss the trade because this is a trade that typically wins 70 to 80% of the time. And anything that wins 70 to 80% of the time, guys, is likely to lose 20 to 30% of the time. It's a mathematical obligation of the trade. So rather than hope it wins, we're going to put a protective stop below that window of opportunity. Your initial stop will typically be 12 to 14 ticks on a futures trade, about $120. Because if the market continues through that window of opportunity, we don't want to be in the trade anymore. We've lost that third advantage. It's no longer a high probability trend trade. And guys, this is your foundational trade for the new user. This is a trade that as a new user, your only focus, and I can't stress this enough, your only focus for your first 20 or 30 days is getting in right here, right at that area of support inside of favorable large triggers. Because this is the entry that creates a manageable trade. This is the entry that gives you the best of the best. And this is the entry that when you follow the rules, this is your result typically 70 to 80% of the time. The reversal bar prints. We identify the window. We get in at the top. Our stop is outside. And 70 to 80% of the time, you're going to watch this market go straight to your profit target, right? You're going to watch it go in the direction of the trend, in the direction of the momentum. This refinement process reduces your risk. Because now, once that market begins to go, my stop is below a reversal bar. It's not uncommon to see Nexgen users with 3, 4, 5 ticks of risk on a high probability trade. Because we wait for the pullback to the areas inside of favorable large triggers, guys, look at the distance to our profit target. We have maximized the profit potential. And all you need to do for 20 days is focus on this entry. All you need to do for 20 days is begin to recognize the conditions on the large chart. And let's see if we have one. When the volume is split, it's tough on crude oil. Recognize that odds favorable momentum. And let's just keep it easy, right? Let's only focus on trigger strength because strong triggers break areas, right? So we can come back and we can see that odds favorable momentum. And we can see everything pointing down. And if I circle this tail, guys, I just want to see what it looks like on a smaller, faster chart. And it pulls right back to the mid-band right there. And this becomes a high probability trend trade, guys. And I'm looking at the NASDAQ. But all I'm doing right now is learning how to study. I'm learning how to scroll back, how to recognize that momentum and identify the tails. And if those tails line up with an area of support right there at those favorable large triggers, well then, guys, I know that I'm giving myself all these advantages. And this becomes a study process. This is how you guys are going to be able to go back and test the theory. This is how you guys are going to be able to go back and develop trust. This is how you guys are going to be able to go back and create this recognition that when the triggers are their strongest and when the path is clear, we don't trade these tails. What we trade are pullbacks to areas inside of favorable large triggers. And I want you guys to start doing this. I want you scrolling back. Your software goes back 10 days, guys. Your software goes back historically. That's how the fibs are created. And if you scroll back, this is the S&P. And it's been kind of just up and down, right? But if you scroll back, what you're going to find are these scenarios where the momentum is strong, where the path is clear. Get in the habit of circling it. Everything says down. The triggers are strong. We broke through support. It became resistance. What does this circle look like on a smaller, faster chart? I'm going to scroll back. And you can do this for 10 days and create this recognition, guys. For 10 days, you can scroll back. You can circle these tails. When you're done trading the day, go back. See if you missed opportunities. But this look pulls you right back to resistance inside of favorable large triggers and continues the move to Fibonacci support. This is your best of the best. Guys, give me a Y in the room if you're with me. And everything that we do is patterns. Everything we do repeats itself over and over. I want you to look at this picture, guys, and this blows my mind when I do it. This picture was from yesterday. I'm going to go back to the study material. I'm going to go back to the termination conditions section. And that first picture that we looked at, do you see any similarities from this crude oil chart back in March of 2021? Price breaks the area. it becomes resistance, the tail pulls back with odds favorable momentum, and it finishes the move to support. Guys, this is from 2 years ago. The pattern and the look are exactly the same as what happened 12 hours ago. And these patterns repeat themselves on every market. They repeat themselves on every time frame. They repeat themselves whether you're trading stocks, whether you're trading futures, whether you're using this to work with your options trading. It's the patterns that create success. It's that pattern recognition over and over that's going to give you a statistical advantage every time you enter the market, guys. And this is why we focus on that foundational trade, why we focus on that highest probability trend trade first, why we respect termination conditions, why we embrace momentum, and why we refine those entries down to the most probable spot for continuation so that we can have this foundation, guys. And every time you focus on a high probability trend trade, your brain is going to begin to see patterns. Your brain is going to be recognizing conditions, things that replay themselves every day in every market. And that recognition is going to create success on a million different levels, guys. And what you're going to do is you're going to learn this foundational trade and you're going to embrace these advantages. And what it's going to do is it's going to set you up to take some of those trades that you see more advanced traders taking. It's going to set you up to take those trades that are outside of the high probability trend trade because of pattern recognition. You're going to understand when areas are likely to hold. You're going to understand when areas are likely to break. You're going to understand when the entry is a good one, and you're going to understand when the entry is a little bit risky, guys. Which is going to bring me to one more thing before I introduce you to the most conservative plan you could ever take in the world. You ready? When we talk about termination conditions, when we talk about the high probability trend trade, there's only two options, new users. There is no clear path, or there is a clear path, and that's it. And I need you to embrace this idea for 20 days and give yourself these advantages. Because during that 20 days, you're learning to read your charts. You're learning to recognize momentum. You're learning to recognize termination conditions when they break and when they hold. And it's going to take you to what we call a medium probability trade. And I want to go back to the glossary of terms. And I want to really focus on the words associated with the medium probability trade. It's defined as when most of your indicators line up for a trade, however, a small problem exists. That small problem that's going to exist, and it may exist in any form, guys. It may be that there isn't enough momentum, so you'll insist on a clear path and you'll insist on an entry area. Or it may be that you don't have the best entry area, but if you have momentum and a clear path, you may look for an entry and it becomes a medium probability trade. Or in the one that we're about to discuss, you don't have the clear path, so you're going to insist on momentum and you're going to insist on that perfect entry area because a medium probability trade says that an issue exists. Your issue is that one of these advantages goes away, so you're going to embrace the other two. And this will ultimately be the vast majority of your trades, guys. You will take more medium probability trades than high probability trend trades. High probability trend trades are going to teach you how to read your indicators. They're going to teach you to recognize that one small issue that exists. And when you execute medium probability trades, you're going to take them and you're going to manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. Your ability to recognize divergences in the moment are going to allow you to manage them assertively. You're going to be able to get to a zero loss level quickly. You're going to be able to take quick profits on these, and you're not going to hope for home runs on these medium probability trades. What you're going to do is you're going to manage them assertively, and you're going to embrace the other two advantages. The first medium probability trade that new users take typically is what we call a 50-50 trade. When 50% of your trigger lines have broken through an area with odds favorable momentum, with that strongest trigger look, this area suddenly has the potential to break because strong triggers break things, guys, and it creates wonderful opportunity. When the smalls are through and the large are not, 6980 has the potential to break with all of this momentum. But we're waiving the advantage of the clear path because the path isn't broken yet. It just has potential, right? We all had potential growing up. You heard that. Oh, he had so much potential. Some of us went on to do great things, and some of us didn't. I guess I think we all did great things, but there's people that don't, right? So smalls are through, large are not. The momentum is screaming. This area has the potential to break. This is your first trade. It's a 50-50 trade. It's only a reference to where the trigger lines are in relationship to the area. Has nothing to do with the chances of success. You could call it a straddle trade because they're straddling the area. When you don't have the clear path, once again, I'm going to say it, embrace the idea that your momentum must be the strongest. Embrace the idea that your entry area must be small, concise, inside of favorable large triggers to give yourself the best chance of success. Because even here we had odds favorable momentum. There's one of those tails, but that support doesn't break. The large triggers never make it through, and it ultimately continues to move up. Here we see the same thing. There's one of those tails. There's one of those pullbacks. We're going to assume that the entry was perfect, and then there goes that market in the direction. So this 50-50 trade will be your first medium probability trade, and you're going to see it play out all day long. You're going to see these 50-50 trades. Smalls are through, large are not, and you're going to be able to recognize that loss of momentum. And for a lot of you, this is going to keep you safe on this trade. This is going to keep you from taking that trade because the path isn't clear. And now the momentum is decreasing, and there's those three divergences in the same location. And it's going to help keep you safe as you look at these 50-50 trades. Here's another one of those 50-50 trades. Where was that? 609-ish. And it pulls right back to support inside of favorable large triggers. And that's that next level, taking that trade through pattern recognition and being okay taking this trade because it comes from a termination condition, because it creates the full reversal. We know that this creates an advantage in the market, which means that our plan will grow on those 50-50s. And then from that one, you watched it go straight to a termination condition. And that was your exit, where the market is likely to continue or likely to stop, where it's likely to go. And then from there, it pushes down to support in a mid-band, just like in the picture from the lesson. And it pushes right back up, guys. You knew not to go short because of the termination. You knew to sit on your hands because of this one. Ultimately, it breaks and heads through. And that's where you look for that next great trade. So, guys, this is your foundation. This is your first. This is your let's focus on the best of the best. And then from that, let's move on to all those other amazing opportunities that the software provides. So to keep you focused in the beginning, simplicity, right? This is a trend trade checklist, guys. And this trend trade checklist was designed to keep new users focused on the best. It was designed to give you a trading plan that creates more advantages, that has a better chance of winning. And if you can mark yes to each of these on the trend trade checklist, you're taking a trade that typically wins 70 to 80% of the time. And I've never had anybody follow this to the letter and do worse than 70%. So this high probability trend trade checklist, guys, this is your first 20 days because what it does is it teaches you to get into the market at the correct spot. And when you get in at the correct spot, trades are easier to manage. I'm also going to give you the exact same checklist, but this time it has pictures. What is a good top or bottom? Remember, it's a termination that creates a full reversal, and there's a picture. Rule number 1 says strong triggers. Here they are visually. This is a great thing to review every day, new users, before you start. What is a clear path? Well, there's my termination. There's my clear path. There's that 50-50. So in the beginning, that clear path, it needs to look like this. Price doesn't reach an area. And where is my window of opportunity? And guys, this is, in my opinion, the best picture on the whole spreadsheet because it talks about the reversal bar to get us looking for the window, and it talks about the lines inside of favorable large triggers. It accurately describes exactly where your limit order goes, and it helps eliminate the noise. The areas outside of the trigger lines are not a part of the window, and you see it on both sides. Guys, this checklist with the pictures should be a review for new users every morning. It's not going into the room. There we go. Take a look at it. Review it for 5 minutes. Make sure you know exactly what you're looking for, right? Make sure that you're focused on the best of the best in the beginning. And then one more thing that I'm going to give you guys. This is what I call the KISS trading plan, the Keep It Simple Sunshine trading plan. This is designed for new users. This is designed for my demos. This is designed for my first month, second month, third month. As you learn to read your charts, this is designed to give you the utmost advantages, to create a scenario where you should be taking more winners than losers. And from that, the memory of success comes. And the memory of success creates confidence. And this is your pattern recognition. By focusing on the same thing repeatedly, it's like being 15. Remember when you learned to drive and you got behind the wheel and you couldn't hear the radio and you didn't hear your parents talking to you and you didn't notice what was going on the side of the roads because you were singularly focused on not crashing that darn car, getting from point A to B and being successful with it? That's your high probability trend trade. There's your entry, guys. That's your focus. And you need to manage that high probability trend trade. And a mechanical approach to management is the easiest way to do it as you're learning to read your software, guys. Your initial stop, 12 to 14 ticks, make sure that it's outside of that window of opportunity. And I say 12 to 14 ticks because it gives you reaction time. And then if you take the best entry and your stop is outside of the window, there's absolutely nothing for you to do as a new user. I want you to free yourself the burden of opinions. Either you get stopped out, it hits the stop, it goes beyond the window, and that's part of that 20%, right? That's a cost of doing business. It's your only option at this point. You took the best entry with all the advantages, and now it's either going to hit your stop or it's going to give you a reversal bar in the direction of the trade. And if it does, this is where we begin to manage our risk. This is where we begin to reduce our risk. And you can put a stop a couple ticks above that reversal bar. And now there's nothing to do once again because we're not going to let our emotions take over, guys. We're going to keep it mechanical the same way the entry was mechanical. We're either going to take a small loser, which happens. It's a normal part of a positive equity curve, or it's going to go to our first target. And your first target as the brand new user is $100. And this just aggravates some of you people. I can't do anything with $100. That's ridiculous. My dinner cost more than $100 last night. Guys, $100 isn't about the money. It's about the win. It's about that feeling of success. It's about the serotonin that floods your body. It's about that dopamine kick. It's about understanding that that's $100 that's in your account that they can't take from you. And that little feeling of success, that small victory as a brand new user, feels good. It gets you excited. You're going to move your stop to break even. And when you move your stop to break even, now you have nothing to lose and money in your pockets, guys. And this is a wonderful feeling. And there's nothing for you to do. And that feeling of success makes it easier for you to do nothing and sit on your hands and see if it hits your second target. It's either break even, no worries, or it's your second target. And if it hits that second target, it's only $200 in the distance, guys. On a 2-lot, that's a $300 trade. That's $300 in your pocket from the highest probability trend trade, guys. And a $300 day is a $1,500 week, and a $1,500 week is a $6,000 month. And that $6,000 month is a $72,000 year. And that one simple high probability trend trade creates the results. The process of taking the trade, the process of managing the trade creates the results. Your desire for money doesn't create the results. Your wish to win doesn't create the results. Your ability to take a trade that has every advantage creates the results. Your ability to manage that trade creates results. And here's my favorite part, is those results are based off of the worst case scenario with the most mechanical management. What you're going to do eventually is you're going to learn how to get more out of that. Your chart reading, recognizing that momentum, recognizing that clear path, is going to have you holding for bigger moves. It's going to have you not going to break even immediately. And what you're going to do is you're going to begin to really get the full potential of this software. You're going to be able to recognize that when the triggers are strong, that using Fibonacci as a target is advantageous. And suddenly that $300 trade becomes a $700 trade. The risk is the same, right? The whole idea is same on the risk. You're still not risking a lot. And on this trade, oh my gosh, I had $100 of risk once I got the reversal bar. And I'm risking $100 on a contract. And you can take money all the way down, right? More contracts, better trades. Not more trades, more contracts on the absolute best trades. And you're going to learn to manage these trades. And every great entry creates a management trade. Every great entry creates an opportunity for success. So guys, I'm giving you this simple plan, this KISS plan, to keep you focused on the best of the best. And it starts with never fighting direction or triggers on that large chart. That's a huge advantage. And then I'm giving you that 50-50 trade, that first medium probability trade, that trade where everything isn't perfect. You don't have a clear path. So this simple plan is designed to have you embracing the advantages outside of the clear path, embracing the advantages of momentum. So your checklist for this one says that you must have strong triggers on both charts, and you must have no divergence on your smaller, faster chart. And if you mark no to any of these, you're going to sit on your hands and wait because you know that you've lost that advantage. It also has you looking for that termination condition that creates a full reversal, because for the brand new user, this creates an advantage. For the experienced user, this creates an advantage on this 50-50 trade. But what we've done is we've coupled them together. We're making sure that the termination creates a full reversal. We're making sure that there's no loss of momentum. And we're making sure that that entry area is concise and tight and focused to get the absolute most out of the trade, to reduce our risk the most on a medium probability trade. Guys, this isn't designed to hold you to these rules for the rest of your life. This is designed to help you find success as you learn to read your charts. The management on a medium probability trade has to be different than the management on a high probability trade. A medium probability trade must be managed assertively. You're still using the window of opportunity, and you're still using these termination conditions or the reversal bar, but you're managing this trade differently because it's a different trade. If divergence prints, you're going to exit the trade. Guys, that is the third reference to not staying in a medium probability trade with that loss of momentum. Your first contract's going to be at the trouble spot, whether it is the fib that needs to break. Maybe there's a divergence low somewhere. Maybe there's some bump in the road. You're taking quick profits, you're getting to break even, and you're not looking for home runs. You're looking for the opportunity to get paid, get out, and wait for the advantages to come back. And guys, this is this KISS trading plan. And I put this challenge on everybody who's not consistent. I put this challenge on every trader that's learning to get the most out of their software as they learn to read it. Follow this plan to the letter for 20 days and let me know what your results are. Follow it for 5 days and let me know what your results are, because I can tell you that I go back and I study each and every day to this plan, and there's more winning days than losing days. There has been in my study. Do the same thing. So guys, that's your foundation. Welcome to Nexgen. We're going to learn to read our charts. We're going to learn to recognize advantages. There's a 50-50. And there's divergence, and it pushes right through the midband. I'm going to give you criteria to help keep you safe. You're going to learn to study it. You're going to go through repetition. You're going to ask a million questions. And together, you and I are going to get you exactly where you said you wanted to be. You and I are going to get you to the point to where you're a confident trader ASAP. We now know the trigger line and Fibonacci rules for when it's okay to trade. You're going to start simulating and posting them in the room, just like Paul, Wells, and Debbie just did. And we simplified the two trades in the plan, guys. We've got the highest probability trend trade so that we can focus on entries. And we have that first medium probability trade where we sacrifice the clear path, but we embrace the advantages to give us the best chance of success. Now you have to learn the looks. You have to go through repetition so that they become easy. And guys, when you see a rules-based entry 250 times, it gets easier to recognize. There's my checklist, or my spreadsheet again, guys. Start going through those pictures. Every morning, go through those pictures. What am I looking for? Right? What are my conditions that need to be met? Paul says he hates starting the day with a loser, but he'll take this one every time. Paul, it's a 50-50 trade with two divergences, right? Paul's a little more advanced. Paul's been doing this for a while. Brand new users, if you embrace the KISS plan, the idea that divergence on a 50-50 screws up the party, you can avoid this loser. But this is a part of Paul's plan, right? It is. It's a great top. And Paul, and guys, this is what we do, is we take these pictures and we talk about them. Something to think about, Paul, and let me know what you think about this. This good top made this 50-50 work, right? And this good top made this 50-50 work. How many times is a good top going to make a 50-50 work? How many times are we going to rely on that good top to break through areas that haven't yet broken? And this is what I think about. And look at this. That first run had no divergence. It closed the gap to the large triggers and continued down. The second one that had the potential to break broke, one divergence, strong triggers, and it continued the path down. By the third wall, think about running through walls. By the third wall, you're getting tired. And you see that through two divergences. Your trigger lines are beginning to split. They're not as favorable as they once were. In your window of opportunity, while it's very small, that market begins to exhaust itself as it moves down. Does that make sense? This is something that I've started noticing on 50-50s, guys. These 50-50 trades are awesome. I take them myself. They're a part of my plan. And when they come from a good top or bottom, they're amazing. But Paul, here's another example on the NASDAQ. This great bottom smashes this first fib. But when it gets up here, 25, 30 points later, it's got a lot more work to do, right? And of course, up here, when we get to the top, we begin to see that it exhausts through the form of divergence. Guys, this is something that I've never talked about in class today. This is a pattern that I've been recognizing over and over. So here's our good top. First 50-50, absolutely effortless, smashes through it. Now we're on our second 50-50, trying to break two areas. And there's that divergence, and there it goes right past the window of opportunity. These patterns repeat themselves, guys, and I talk about it very matter-of-factly. I talk about it very calmly because I've done the work, and I've done the pictures, and I've taken the trades, and I've asked the questions. And you guys don't realize this, but I ask John Novak a million questions every day. Every day, I'm asking him about patterns. Every day, we're discussing advantages. Every day, I'm trying to get a little bit smarter, and I do. I get a little bit smarter every day. But I'm gonna copy paste what he put in there. You don't buy experience, guys. Experience comes through repetition. You buy kick-ass software and better education. That's what we're doing right here. We're giving you feedback on everything that you do. And as long as you keep participating and practicing, as long as you're on simulator and you're taking these trades and you're making these mistakes, which is absolutely okay, we're going to talk about everything that you do every day. And it's that experience that's going to get you where you need to be. It's that experience that's going to recognize those subtleties. It's that experience, guys, that may have you taking this trade directly into a fib because you know with this much momentum, ultimately, it's probably going to get to that second fib. It's not a new user trader, but I can tell you from the picture posted today that when you get comfortable reading your charts, it opens doors for you. But you have to understand the basic foundational lessons before you try to take the advanced trades, right? Let's learn how to draw blood before we do an appendectomy. And guys, that's our first hour, and it's the same first hour every week, every day. We're going to talk about foundations. We're going to talk about advantages. And once you can identify these advantages in the moment, you can begin to expand beyond these advantages, right? You can begin to look for other opportunities. Once again, 50-50 trade. There's that divergence. And if you're following the KISS plan, guys, you've missed like 4 losers that other people that don't have Nexgen are taking. And I love that. I love it when you guys are successful. But I'm going to take a break, and then I'm going to come back and we're going to start looking at all your pictures. I want you to do me a favor. If you've never posted a picture in my room, I want you to post one. Take a picture of any chart, right? Any market. I don't care what it is. Tell me what you see. Maybe you see a pivot stop out. Great recognition, right? Maybe you see a divergence line and you just want to point it out. Maybe you see a good top because it's a termination that creates a full reversal. Take a picture, post it in the room. When I come back, we're going to go through all of your pictures. We're going to talk about what you see, what you're doing, how I recognize that maybe you can do it a little better. I'm going to focus heavily on the praise side of things. You did this great. Here's how you refine it. I want you to do the same thing with yourself, guys. I want you to focus on the praise side of things. Every time you take a trade, I want you to talk about everything that was good. I want you to focus on the reasons it had a chance to win. And then we're going to systematically eliminate the challenges. So I'll be back in 5. Talk amongst yourself, trade if the rules are met, and then we'll get into that second hour, guys. Great first hour. All right, let's get into that second hour, y'all. When I scroll up to look at your charts, I just want you to see that I've got to scroll up all the way to the top. So what I do is I go back and forth. Is I'll scroll up to the top, I'll look at a picture or two, I'll come to the bottom and make sure that I'm not missing a question or a comment. And I want you to do me a favor and make sure that if I miss something, let me know. Guys, look at the S&P from termination to weak triggers and divergence to pivot stop out. There's that divergence low. Hit it to the tick, and we're back into resistance. Next-gen users, you don't ever have to get caught up in this kind of mess. You don't ever have to get caught up in this consolidation because rule number 2 keeps you safe. Rule number 2 keeps you out of that. One of the reasons why we talk about the foundational trading, making sure that you're giving yourself all the advantages. And guys, the first thing I'm going to share with you is John Novak shared it in the room. I'm going to put it one more time in there. If you scroll up to the top, John Novak put this video watch list in there. And guys, this is absolutely amazing. This is good tops and bottoms. These are trigger line lessons. These are psychology-based lessons, mentality lessons. So I put it in the room again. Save that to your computer. Give yourself a little homework to watch some of these. He also put in a link to for trading computers, how to buy a trading computer. And then he starts talking about all the great things. So I'm going to come through and I'm going to start looking at your charts. And let's see what we did today. Gary got us going today. Whoops, I missed your first one, Gary. Here we go. Talking about that crude split. Thank you for that. Guys, for those of you that are trading crude oil, the contract is rolling. So it's split. It's a little weird right now. Gary, thank you for that. And then Gary, this was your missed HVA trade. And I put a note in the classroom this morning. And I think that regret is huge with traders, right? Regret watching the market do something you thought it was going to do, but your rules weren't met. And I talk about this because I do it too. It turns out I'm human. Everybody does, right? You're like, oh, I knew it was going to go down. I knew it was going to go down, but my rules weren't met and I missed it and I didn't make that money. And now I'm going to go adjust my plan to make sure that I never miss that money again because of this one time. And Gary, your checklist says that if the target area is reached, including the mid-band, cancel the trade. And what I notice here is that you're trading directly into support, right? There's support and your triggers are way above it. So per the checklist, it just really wasn't a rules-based trade. It wasn't there yet. At the time of the first hit, they're right there at the smalls, right? But that termination condition. So it's one of those things, guys, when these rules are put together and provided to you, every time that John Novak puts all that time into it, it is from, honestly, probably 1,000 hours of research going through, giving you the highest probability. So adherence to it until you're comfortable breaking it is a good thing. And then Moon, I absolutely love the way that you're taking these. And you're consistent and you're rocking it. And Moon, are you in the room? Because I want to talk about the first trade. Jared, the volume for go to, I'll give you instructions for both here. It's your market analyzer. So both 7 and 8 have them. And it'll let you know what the volume is trading on the contracts. And then I don't have 8 up, but this really, it's super easy to do. It'll just have you create a market analyzer, and it'll show you exactly what the volume is. So when crude oil rolls or the S&P rolls, you can take a look at it. You bet. And then Moon, you said you got greedy and got in too early. I like the recognition, and I agree with you 100%. All your large and synthetics were up, but your smalls were down for sure. But then when everything agrees, it becomes pretty easy on the way up. Great job, Moon. And it's been fun watching you develop your style through your chart reading, through the recognition of Fibonacci, through the recognition of momentum, and just taking those opportunities. Nicely done. And guys, I'm never going to talk down about what you're doing. I'm never going to knock the trades that you take. We're going to talk about what I see. You're going to tell me what you saw. And if there's a challenge in the way, I'm going to talk about the challenge, right? And then you're going to continue to develop your plan. I provided you the simple plan. What you're doing is you're building your plan. Termination, took a shot after the small rolled, after the triggers rolled on the small chart. So termination, full reversal. Let me see where your entry is. I like it because you let it clear, right? Ziva, this is huge because yesterday you went short here. Today you waited for it to start heading the right direction, and you were able to take it all the way down. And then I'm not sure what made you hold it to get to the fib. That last contract was a little aggressive on the hold, I think. That was at 34. It's hard to see what the price is there. That was a large chart mid-band, probably right there around the one-to-ones that created all the indecision. Not a bad target right there. Maybe take some of the headache and stress out for you. Keep those palms from getting sweaty. And that's the same picture. Nice job, Ziva. Great patience on your entry. And that was just a simple conversation yesterday, right? And you put it into play today. That's awesome, guys. That's the goal. One step better every day. Oh, I'm sorry. I was so caught up on how great your entry was. You wanted to close after your first target, but couldn't because it got stuck. How on earth it didn't hit my stop? It moved my stop. It went down and hit the second target. How? It's because God loves you, Ziva. It's the only answer. I don't know. Sometimes when things don't work out, it still works out. And that is a wonderful thing, right? I had a trade that crashed once mid-trade. And when I finally got open back up, I was up like 27 points in the NASDAQ. It was the right trade. And that's what helped it, right? Because you had momentum, because you had direction. You just had to sit through the 50-50 without being able to see it. And it ultimately, the 50-50 works from a good top with everything down. And you didn't have to sit there and stare at all the nastiness because it just got stuck. I think that's awesome. Living a charmed life, Ziva. Good job. Good top. Triggers rolled. You entered. You got stopped out because it hit your stop, Ziva. Because you put your stop right here and it came up and hit it. You don't have to have a reversal bar to get stopped out, right? All it has to do is hit the price. So if your stop was right here, it just got popped. And then it went right where it was. So you were down, you were winning, and you said, I'm going to protect some equity. And it's like they knew, right? It's like they knew where your stop was. I've done that before. And it's frustrating to get stopped out at the high tick or the low tick and then watch it run. And you're just like, arg. That's the technical term for the way you feel when that happens. The way I feel when that happens. I turn into a pirate. There you go. The world is a wash, right? It's a big balance. All right, Safia. What are the rules for your momentum trade? Hi. So what has to happen for you to take a momentum trade? And I ask, and I like what you did. Don't get me wrong. But one thing that I do, and just for consistency, for recognition, I'm going to go over to Discord real quick. Fib 1-to-1. What's MD? Midband on the small chart? Okay. In which direction should your small triggers be running? Should they be strong in the direction of the trade so that you have momentum? I'm just going through Discord rules. Yes? So do you see how maybe just a little early you didn't get the reversal bar that the momentum rules call for, right? You didn't get a full bar on the large chart. And when we talk about that momentum entry, right there, that little stab back, right there, that little stab back. And this will, what you'll find, take a lot of stress out of your trading. It's just a little early. The read is right. You're good. It's on its way to doing what it's supposed to do. And your management of it is beautiful. And I think that it might be just a touch early because at the time of your entry, every trigger on your large chart is below resistance. And technically, it's a 50-50 to the downside. And your entry was kind of the management out of that 50-50. Does that make sense? Yeah. I think it's a good read. This is the difference when chart reading begins to supersede rules, and it happens to everybody I've ever met, guys. Your ability to read the charts, because you've seen this pattern so many times, you almost anticipate it, right? It's like when you know the scary part in the movie's coming up, but you start tensing up, and you just have to wait. You just have to be a little patient and let the scary part happen before you scream. Great job. I think that's a good conversation. I think that's my favorite part of the classroom, is taking these awesome opportunities and just trying to make them a little bit better for you, trying to make them just a little more clear, trying to give you just a little skosh of advantage, right? And then, Paul, we talked about this one. That was the two divergences on the third area. And then Wells. All right. Wells, we found your pattern. News in a minute. There's 10:30 news. $10:30 natural gas storage. Wells, we found your pattern. Your pattern is right now getting in at the very bottom of the move rather than waiting for the pullback to resistance inside of favorable large triggers. Does that make sense? I love this. Good top, odds favorable, smalls are breaking through. And look at how your sell limit, how your stop for this trade, Wells, is right at the area of resistance, right inside of favorable large triggers. And this is one of those things where just that little bit of patience. Or did you go long? You went long there. Oh, never mind. Hold on. Different thing. So you had a good top and you had odds favorable momentum and everything said down on every chart and you went long. You decided to fight trend and momentum. I'm not whoopsie. You know what? At least you did it in a blue line. But do you see how that might be just a little flipped? And you also don't have a protective stop below you, which means that if all this momentum does exactly what it's likely to do, because that's what happens when you have a great top and everything's screaming, you don't have anything to protect you if things go wrong. Does that make sense? Do you know how to set up your stops and targets? See how you have no ATM strategy? Awesome. So let's go through it real quick. And you're on 8. Let me open up my NinjaTrader 8 real quick. Because, oh my gosh, guys, this is one of the biggest lessons, one of the most important things. And I think Walter asked this question yesterday. Mark, why do we have stops and targets? Well, we have them because in order to really find success, right, in order to be consistent, to be really on the right side of things, you guys have the ability through amazing entries to manage your risk before you ever have to concern yourself with managing your rewards. So one thing that Nexgen did, and I'll build a new chart real quick. On my way. All right, new chart's coming up right now. So what Nexgen has done for you, Wells, and everyone else too, is when you open up a chart, off to the side here, this is your chart trader, right? This is showing you everything going on, and this is awesome. But one thing that Nexgen did is they provided you with all of these ATM strategies, and what they are is this is where my initial stop goes, and these are what my profit targets are. So, for example, if you're trading a 2-lot on the S&P, or for crude oil, right? This 2-lot, your initial stop is at 12. Your targets are at 20 and 30. So if I click on that and I have this in place and I sell the market, and I'm still calculating here, I'm probably going to crash it. Hopefully I don't. Good rule of thumb, guys, is to keep your hands off of the charts when they're loading. I broke that rule. But what you can do, Wells, is you can get into every trade with an established target. You can get into every trade with an established stop. Yeah, I totally fudged my chart here. There we go. Well, target filled with momentum. There we go. If I go short with everything saying down, now I've established, just let me do it real quick. Okay. Don't fight, right? I've established my risk. I've established my my targets. So Wells, what it does is it gives you an opportunity. Let me put in a bigger stop here. And if I sell the market, now I have a protective stop in place. Now I have targets, and I can click on that target. And if everything says down, I can put it at Fibonacci support, right? And if I'm holding for larger moves eventually, I might put it even further down at a further station. But I've got a stop in place that says this is where, if things go wrong, I don't want to be in the trade anymore. And you can see how I can take the stop. I can move to break even if I want to move to break even, right? My target's in place. If I'm like, oh no, I need to take profits a little higher, I can move my target. It'll pull me out of that one contract as I reach Fibonacci resistance. Maybe I want to tighten up my stop. But what it does is it allows you to protect yourself. It allows you to get in there and really kind of have a predetermined risk every trade that you take. It lets you have those targets that can be moved. And it's just the ATM strategy. And Nexgen gave you tons of options here. So practice using those. Practice getting in and out. Practice moving your stops and targets. And And when you're doing that, always make sure you're on sim. There's nothing worse than practicing a lesson and realizing you're in a live account. Don't do that. So fighting everything, Wells, it's hard for me to attaboy you on this one because everything suggested, your indicator suggested that this market was going to go down. Man, you're doing great, and it takes time. But embrace the idea. If you do nothing else from this plan, let that lead the way. Don't fight that large chart direction. Don't fight, back to that natural gas storage, Ron. Don't fight those triggers. It rarely works out. I'm a 12-year-old boy, sorry. Cool. Great picture. And as usual, guys, your great pictures create great lessons. So thank you for that. And then Miss Debbie. I bet you Debbie's trading with the trend. From a termination, 50-50. You took the first one, momentum, absolutely beautiful, all the way down. And then you guys love these 50-50s late in the move with multiple divergence. Awesome, Walter. I'm glad that helped you a little bit. You guys love these 50-50 trades with two divergences late in the move. Why is that? And it's funny because this is the lesson that we gave on Paul's, right? There's that great top. First one smashes. Second one smashes. And now we're at the third. And what is your small chart telling you? Your small chart's telling you, guys, we're exhausted. Let me show you a couple divergences. We're just tired of going down. And this becomes a little difficult. Does that make sense, Debbie? I know you're trying to get your mojo back, and I hope you had a great vacation too. Congratulations on 40 years. That's outstanding. But I think there was a good lesson today about that. When you get deeper in the moves, your small chart's going to give you a little bit of information that might keep you safe. I love that momentum trade first, though. That is beautiful execution with every advantage. Absolutely outstanding. Good morning, Jared. It happens sometimes. Jared, perfect. Absolutely perfect. Jared, you don't post a lot, but when you do, it's amazing. Can I put you on the spot for a second? How'd you feel about this trade coming into it? Like when you took the trade with this much momentum, right? And that fib not reached yet, and everything smashing up, and this tiny little window of opportunity with strong triggers, was there any part of you that thought, yeah, these guys are totally coming for my stop? And maybe there was. This is the look, guys, where I'm like, you gotta come get me. Because this is everything, right? This is everything that I look for in a trade. And Jared, it's beautiful. And you took profits at the first trouble spot. And when you start adding contracts, that's a great spot. Reduce your risk. See if it hits that fib. Not at all. You almost left the room. I've done that. Guys, I've taken trades, put my stops in place. I'm like, I really got to pee. I don't even have to watch this one. Because if it comes and gets my stop, that's cool. That's a cost of doing business. Great trade, Jared. Beautiful execution. And guys, this is a great example of why I say great entries create manageable trades. He's in at 21. Once that reversal bar prints, his stop's at like 13. That's $80. 2-to-1 for you guys that are numbers, guys. It's awesome. It takes a little bit, doesn't it, Jared? It takes a little time, a little focus. It takes repetition, guys, and then that clarity comes. That market that moved too fast to anticipate suddenly slows down. It's a process. It's a marathon, and everybody's going to get there at a different time. Commit to the process. Commit to the education. You'll be amazed. Ziba, this top told me show must go on. I love it. And that happens. The more comfortable you are with your plan, the less anxious you become, the less nervous you become. So Ziba, your large chart says great top, bounces here, comes all the way back to the mid-band. And Ziba, you said, look at this. That mid-band, the large triggers don't follow. Great job on the gap theory. You take a little pull back here. Nope, you're in at 79.25. All the way down here is what it says. Where did I skip your losers? Did you post losers in the room that I missed? I may have. Sometimes I jump through and miss things. So I'll scroll back up and look. Sorry. I love that. That's a student, ladies and gentlemen. Hey, you missed my losers. Let's go talk on them. I love this. Great job. Termination. There's that gap theory. When price hits a mid-band and the large triggers don't follow, it's likely to close the gap. There's your entry where everything rolls and you take it all the way down to the target. Ziba, you have blossomed in the last couple weeks. Everything looks the same. And I think that's amazing because when everything looks the same, things work out. We talked about that one. That's the same one. Here you chase the trade, you'd enter after the downtrend, past the previous divergence on the large chart, created odds favorable momentum, good momentum. Not a rules-based trade, it's just a jump in and go with all the zoom, right? That's the exact reason that I tell people momentum creates a crazy good advantage, guys. Momentum creates an amazing advantage. Momentum pushes the market. Yeah, I don't see your losers. I'm sorry. Then Joel, the trigger lines haven't made it through, and you're saying, not my trade. Great read, Joel. Great read. Then Alan, there's your 50-50 from a good top. Kiss plan saves you on the trade. Nice job, Alan. And that's that look again, guys. This great top destroys the one-to-ones. The great top smashes through the mid-band. And then it starts to exhaust and your small chart tells you. Great read. Good job sticking to the plan. And guys, everybody's plan changes. You're not going to get two people that trade exactly the same way. It's just not going to happen because we all see things differently. There are epic battle royales between the Novak brothers because my brother's ability to read charts exceeds mine so much. And where I'm an in-the-moment trader, that's what suits my style. He can see 4 steps ahead. He can see 5 steps ahead. And that's the way his brain thinks. I say if then. If in the moment my rules aren't met, I don't take the trade. He's already saying because of this, because of that, because of these, because of those. And he has orders waiting in places that don't make sense to me. And he started from a foundation too. There was a point where he had to learn how to define the direction of the trend. There was a point where he had to learn to understand Fibonacci, guys. So you guys are all kind of at different points in your journey. What you're doing through posting your pictures is going to get you where you want to be sooner, right? There's that great top breakout. There's odds favorable momentum, and it hits Fibonacci support. And if you said because of this great top, because of the momentum, because of everything and no divergence, if you took this trade, you've got about 2 ticks of risk. But let's see what support does. It's either going to hold or it's going to break, right? Those are the only 2 options. It's either going to hold or it's going to break. Rule number 2 says no more trades. Jose, There's that great top. There's odds favorable. There is the picture perfect momentum trade and managed like a rock star. Oh my gosh, Jose, beautiful. That's it. Guys, this is a momentum trade. When you guys ask me how to take a momentum trade, steal Jose's picture. Odds favorable momentum coming from a good top. Price bars break 1-to-1s with odds favorable momentum. There's your stab back. Perfect entry. By the time it goes down, 2 ticks of risk. Man, Jose, you've been working hard on this one, and I'll tell you what, you're killing it. Absolutely killing it. But do you see how Jose trades from an area? Do you see how Jose has a place where his stop can go so he can manage his risk as he aggressively goes after those profits? Gosh, nice job. I may have to create a section for momentum trades. What do you think, guys? Termination for the win? Too soon to tell, right? We'll come back to it and we'll see what that big blue fib with no triggers through it did. And I guess we can see what this big red fib with no triggers through it does. And now NASDAQ says 3 divergences in the same location. The third is higher, confirming that this might be a little bit of overrun. Smalls are through the area, but the larger not. There's one divergence. And look at those trigger lines. Ugh. What do you guys think, NASDAQ traders? Is anyone jumping in at the top? Or are you just going to hang on a second? You're going to wait and see if it closes the gap to those large triggers. Guys, NASDAQ is a wonderful market. NASDAQ is the only market that I trade anymore. What you learn on the small charts, or on the slower charts, on the S&P, on crude oil, translates to NASDAQ. It really does. But NASDAQ has a completely different personality. NASDAQ moves a little bit differently. And those rules that you're trading on the S&P, the rules that you're trading on crude oil, need to be modified just a little bit for the NASDAQ. But this is divergence on a 50-50. KISS plan says no. The idea that trigger lines trending one on top of the other says no. So some of you are saying this just isn't my trade, and no matter what happens next, even if this market rockets up forever, my rules just weren't met. My rules just weren't in place the way I have them written on a sheet of paper in front of me, and therefore, there is no trade. And there is no remorse. And there is no, oh my gosh, I should have taken that trade. I should have fought these strong triggers, and I should have fought this direction, and I should have fought everything that said down, because look how far up it went. There has to be something down here at the bottom that I missed, right? When everything said down. Or you wait for things to roll a little bit. You wait for things to slow, and you can begin to find these advantages through chart reading. 50-50 with divergence worked, didn't it? And if you didn't take it because your rules weren't met, that's cool.
Order pending.
Because now I've got odds favorable. And now I have a clear path. And now I'm just hoping these jerks give me a pullback to an area of support inside of favorable large triggers. Do you see how quickly that analysis happened? That's how quickly it's going to happen for you guys. Give me a Y if you see it. Let's take a pre-trade picture. And let's go through how we can police ourselves. Guys, this is pre-trade. So new users, I want you to play along with me. Do I have odds favorable momentum? Do I have strong trigger lines? Are the smalls separated from the large? Are they wide? Are they angled in the direction of the trend? What do you think, guys? That's my first rule, and it has to be true. Walter says yes. Walter, I agree 100%. Do I have no termination conditions? Price hasn't reached a fib. It hasn't reached yellow 1-to-1s. It hasn't reached anything, right? And all of my trigger lines are above resistance, so my path is clear. So what do you guys think? Clear path? Walter says yes again. Walter, you are my prize pupil. I never got a reversal bar, but if I look at the top of the triggers to the bottom of the triggers, can't I identify, even without a reversal bar, that this highest point of support to the lowest point of support is right where the market is likely to continue? And because of it, I should have a limit order at the top of that window in case a pullback happens, because that's my high probability trend trade. And it went without us. It never gave us that pullback. And that's just a part of life. But guys, now I know exactly what I'm looking for. And now, because of the rules, because of this checklist laid out in front of me, every time I think I see a trade, I can go through it. And guys, this is a 100% at the time, rules-based. This would have been the perfect entry. Get up there. It just didn't play out, which means that it wasn't my money, which means that that wasn't mine to have. Some of you are willing to take this one. One divergence on the 50-50. Some of you will take that have progressed a little bit. Like Safia. With all of that momentum, and there were multiple divergences, it's not a good bottom. It's just divergence from beyond all the areas, Safia. But let's go into that next level chart reading. What did you notice? No, stop saying sorry. If you kick my dog, say sorry. Other than that, it's just conversations. So Safia, what happened on the small chart to help confirm that that was a little bit of overrun? Do you guys remember that one termination condition on the smaller, faster chart? What happened over here off screen to help me confirm that that was probably just, in fact, a little overrun? 3 divergences, right? So the large chart couldn't slow down in time with the momentum. The small chart gave me that picture-perfect pattern that said, no, it's just a little overrun. Large triggers didn't make it through. It was slowing down, but it couldn't slow down fast enough. Here's your visual that it was a little bit of overrun, which is why this is pretty cool. And when those large triggers come back above it, it confirms. Here we go. That was overrun. 3 divergences says it was overrun. So this becomes a 50-50 with one divergence from a great bottom, which is rules met for Safia, which made it easier for her to take it up here. That's chart reading. If the small triggers are outside of the large triggers on the smaller chart, keep going. Safia, the other half of that conversation was that if you're in a rules-based trade and the small triggers are outside of the large triggers on the small chart, you can hold for longer moves. So I want to make sure that that lesson is there. If this was into a termination condition with strong triggers, I was right, actually. You sound like my wife. Wow, you were actually right. That never happens. But do you see how the strong triggers made you feel better about it? The 3 divergences on the bottom made you feel better about it? The small triggers not eking through but smashing through with aggression makes you feel better about it? A tiny little consolidated window of opportunity makes you feel better about it? So you say to yourself through chart reading, hell yeah, I'll take this trade. And it sure worked out, didn't it? And Safia, beautiful usage of Fibonacci for targets. Where the market's coming from, where it's likely to continue, where it's likely to go before you ever get there, And then because no triggers are through, it's where it's likely to stop. Picture perfect. Every one of you in this room is going to get to that point. Gary, perfect. And guys, you don't get there in the first week. It takes a little time. You probably don't get there in the second week. But I'm going to tell you right now. Awesome. Hey, Wells, I think I glanced at it real quick. Safe travels. Have a blast. Send pictures. I know that you have a little traveling, so no, be safe. How about that? Be safe. Oh, and I think I understand why. Be safe. Gary, you feel like you need to retrain yourself from the beginning. All right. So Gary, and this isn't unique to Gary at all. And I want you guys, I'm going to tell you a little story. We're going to go story time to finish out the first hour. And this is for all of you people that want to be professional day traders. The most common thing that I see in professional day traders, the most common thing that I see in people that are successful with our software is that they have a very limited amount of trades. They are hyper picky on the trades that they'll take. And they will sit on their hands and do absolutely nothing if their research and study hasn't proven that they have a statistical advantage. And then the other way of saying that is they have a very simple plan that provides a statistical advantage. Now, a lot of you in this room are amazing traders, and a lot of you in this room are amazing chart readers. And a lot of you in this room are so focused on making money that you feel like more trades will do it, that you feel like if I can just catch the moves that I saw Ron take, and then if I just add to that long that I just saw Gary take, and then if I can jump in every now and then like Ziba does, and if I can take that high probability trend trade the way Jared did, well, then I'm going to be rich beyond my wildest dreams. And you know what? If you could do it like all of them do it, you're probably right. But here's the challenge with that, guys, is that until one thing is easy, right? Until I can look at my large chart and in the moment, in a fraction of a second, say to myself, I'm in a downtrend and it's instant. I don't have to think about it. I'm in an uptrend and I don't have to think about it. And I had odds favorable momentum and I don't have to think about it. And then the other part of it is saying, I have anything can happen triggers. I'm not going long anymore, right? You've got to be able to do this in a moment's notice. You've got to be able to study something so many times that the reads become easy, that you're able to discern information in a fraction of a second. And then if you spend more than 5 seconds looking for a trade, guys, it's probably not your trade. And here's the other part of it. And if you're looking for an HVA trade, if you're looking for a trend trade, if you're looking for a momentum trade, if you're looking for an edge trade, and if you're looking for a counter trade, and we'll call it like a gap theory trade, right? If you have 5 trades on your plate, each trade has 4 to 5 rules, right? So every time you look at the market, you have to discern whether or not, you have to decide what type of trade it is first. And then you have to switch your brain to making sure that you're looking for the correct rules. We saw a picture the other day where somebody took a trend trade and a momentum trade, created this wild little love child between the two, and got run over, right? Because the brain didn't recognize the 2 different trades and it started incorporating rules from each. So this is why I say Keep it simple at first. Focus all of your attention on the high probability trend trade. And guys, with 20 days, 30 days of study, the high probability trend trade becomes really easy. And then from there, focus on the medium probability trend trade. Because the medium probability trend trade takes everything that you learned in the high probability trend trade and incorporates a little extra chart reading, right? So the high probability trend trade became a trade that you could recognize in 5 seconds. And now these medium probability trades are going to take that same 30 to 60 days to study to become proficient and confident at. And then from that medium probability trend trade, because you're so good at termination conditions, you're so good at triggers rolling, well, then maybe you jump into the high volume area trade because you can recognize a rules-based trend trade in a matter of seconds. And then you study it over, and now you can recognize that medium probability 50-50 trade in a matter of seconds in the conditions that bring you success. And now you're saying, I'm so comfortable and I recognize these so quickly that I'm going to add a trade. I'm going to add a high volume area trade, and maybe I can start getting in at the top. And then that one becomes so easy, guys. And it doesn't, nothing crosses, no wires cross. And you said, well, shoot, everything's gotten so easy that I'm going to start looking for a momentum trade now. And I'm going to start studying over and doing that process. And guys, it's a foundational learning approach. It's taking basic math, addition, and then incorporating that into subtraction. And then you take that addition and subtraction and you go, I'm going to do some basic multiplication. And then that multiplication takes you to remedial division, right? And there's your core. Add, subtract, multiply, and divide. And then you start adding variables. And then you start going to long division. And then you start getting remainders. And then you take division and you start to break it into fractions. And there's got to be a process. There's got to be a process where everything starts with simplicity. Everything starts with odds favorable momentum. And everything starts with a clear path. And everything starts with identifying a window of opportunity where the market is most likely to continue. And then accepting that this is a trade that wins 70 to 80% of the time, which means 20 to 30% of the time, this beautiful rules-based entry is going to get run over. And then becoming okay with that, right? Saying I'm going to put my stop in the right place. And if I put my stop in the right place, I'm okay if they come get it. And guys, this is your plan. And then it's just rinse and repeat. Over and over. Finding opportunities, taking opportunities, having statistical advantages. So, Gary, if you feel like you need to retrain yourself from the beginning, and who said yes to Safia? I'm going to put the challenge on you, and most of you aren't going to do it because you're too smart, because you get bored. If you feel like you need to retrain, if you feel like you started chasing everything instead of what you're comfortable with, if you feel like there's too many plates spinning, go back to the KISS plan and give it 5 days. Give it 5 days just to refocus. A gentleman in the room yesterday said, oh my gosh, I started getting comfortable and I started branching out, and I've got to refocus. I've got to get back to what brought me success. Guys, this is your simple plan for consistency. So if you feel like you need to retrain, if you feel like you're chasing too much and catching nothing, or if you feel like you're not following your rules 100% because you're confusing them with other rules, or maybe even you're managing a medium probability trade as though it were a high probability trade, or you're managing a momentum trade as though it were a trend trade, right? And you're getting your ideas and your wires crossed, go back to simplicity just for a minute. Give it 5 days. 5 days. What's the worst that can happen from 5 days? Sim Rockstar and then fail the combine. Why? Because you change your plan, Gary. Because you have Navy balls of steel on simulator. Because there's no perceived danger. Who cares if it loses? It's simulator. And then you get into the combine and you're worried that you have to beat the combine. You get into the examination and you're afraid that you're going to fail it. And I'm telling you guys, I'm in the same boat. I do the exact same thing that you guys do. I'm human. I get too smart for my plan and I break it and it kicks my ass. And that's what it is. Jose, perfect. Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable gives you the perfect entry, and your stop's right outside of the window of opportunity. Jose, that's a beautiful trade. And that is an acceptable loss. And that's a cost of doing business, right? That's your rent on crude oil for the day. And remember, crude oil volume is split, Jose. So those ones that are typically your end-all, be-all, heck yeah trades may not flow the way they usually do today because there's a division between the two. Yeah, I typically, and what I do doesn't have to be what you do, but I typically don't trade crude oil when it's split like that. I wait for one side to gain an advantage. But even your largest chart said we're going up. Every chart says this market's likely to hit 81.20 before it ever hits 80.30. It just didn't want to happen from there. Great trade, though. I would take that trade 100 out of 100 times. And there's your termination that's trying to create a full reversal. And Safia, there's your strong trigger lines. No divergence, pull back to a mid-band after a full bar prints. Do you see it, Safia? That's the one. And then it's not a home run, is it? Get in, get out. Take your money. Gary, it's an advanced momentum trade. And it's not a high probability trade. But it fit the rules. And that's the momentum trade that John Novak teaches. But look what it's into. And look at the direction. Look at the momentum, right? Guys, that's your first shot. I see more users butcher this lesson and get their butts kicked all over the place. Because look at your synthetics, they're down. Look at your large, they're down. Look at your large and your smalls. Everything says down. Nothing says this market's going up. This is beating the system based on a pattern, and you only beat the system 40 to 50% of the time. Maybe 40 to 50. Fail all the time. So then that has you asking yourself, if you fail it all the time, why would you take it? I had to ask myself the same thing, Safia. And let me tell you exactly where my shortcoming in life was as a trader, and where it still is on days where I'm not trading well, is making the decision that there's no way these one-to-ones won't hold. There's no way these one-to-ones aren't going to stop that market in its tracks. Because look at that momentum to the downside. And you know what I do? And the average trader does, is watch this. Is they get in right here and say, with all that momentum, the market's still going to go down, right? And it runs you over. And you go, son of a bruh, I'm so angry. There's no way those one-to-ones aren't going to hold. And you take your second loser. And you're like, yes, look at it go. Nothing can stop it. And then it comes up. And you're like, oh, it's just a little bit of overrun. There's no way that mid-band's not going to hold the market. Look at the large triggers. And you go short right about here, and it looks ridiculous. But what you've done is you've lost $700 on an opinion. $700. And then the same is true going the other direction, guys. There's absolutely no way this blue line isn't going to reverse the market, right? And it's close. I'm going to go long. And then you get stopped out. And then you're like, but it's a blue line. And you go again. And then it fluctuates. And you get stopped out because you got in up here because you waited for confirmation. And then you say, well, gosh, look at this. Everything says down, but there's a stab back to the small. This one's going to go the distance, and then it comes and it stops you out, and you're out $1,000. Has anyone done this other than me? Has anyone in this room ever just kind of formed an opinion and said to themselves, I know it's not perfect, but I'm so damn smart it's going to do exactly what I think it's going to do? And guys, this is where when you find yourself doing this, and yeah, my hand goes up too. This is where when you find yourself doing this, when you find yourself and you recognize yourself getting into this frame of mind, that you take that deep breath, that you back up just a little bit and you say, hey, I have a plan that's been proven to win more than it loses. Hey, Christy, good to see you. I have a plan that gives me a statistical advantage. And check this out, guys. They came back and retested, right? And now it's another termination condition. But now my triggers are starting to roll. My large are up, but my small are below. But do you see how now we start to get that little bit, okay, this bottom might be good, they just weren't done. So let's let things roll. Let's let things kind of get it, at least in the direction before we start taking that first aggressive hit. And now look what's happened. Now the trend is up. And now the path is clear, and now we have what appears to be momentum trying to become odds favorable. It's what you do between 11:03 and 11:09 that's going to help you find success, guys. And look at this one. There's what everybody thought was going to be a momentum style trade, but it pushed all the way back down, didn't it? And a lot of you said, there it is. And that low probability momentum trade that's getting everybody's butt kicked didn't work. It might, Ziva, and it might not, right? It could go up, but couldn't it also go down? This termination might stop the market forever, or it won't stop it at all. Except that you don't have any idea, guys. Except that you don't know what's going to happen. You have no idea what's going to happen. The only thing that you can do is trade patterns. The only thing that you can do is wait for odds favorable momentum and a clear path. And Ziva just said that it might keep going up, but it's not, is it? Because of a larger chart, because of a slower time frame. So Ziva, you're telling me that from a bad bottom, when a 50-50, when a mid-band holds right at resistance with lower divergences successfully, you think this might go up with odds favorable momentum to the downside from a bad bottom? I would say it's likely to go to 14,831.75 before it goes to 81.34 based on patterns, right? Bad bottom. You guys, this is why opinions are dangerous. Because the reality is that we just don't know. But look, there it is. The termination holds, the small break above the large. It pulls right back to a mid-band, right inside of the trigger lines that are together. And holy smokes. There it goes. It's what you do. Well, now there's two divergences. But it's what you don't do when there's nothing to do. It's what you don't do. It's not the winners that create all of the victory, right? It's avoiding those losers. It's avoiding those little parasitic losers that take your money. These trigger lines are ugly. It's pushing up, but these trigger lines are ugly. And if you took the one shot, that's where your one shot went to, right? You'll never see that look on the trigger lines in any of the education material. Support is still holding, but so is the midband. So what if we let one of them break decidedly? You guys feel good about that? What if we waited for odds favorable momentum? Do you guys feel good about that? They can't seem to push through that support. My trigger lines don't agree. My smalls haven't broken away from the large. My large aren't angled wide in the direction of the trend, right? Guys, what you're witnessing right now is that indecision that Nexgen users don't have to get caught up in. There's a termination, creates a full reversal coming on the S&P. Everything's pushing down. Now everything agrees. We'll see what it does. There's a 50-50 with divergence. Well, nope, that's a clear path with divergence, isn't it? Comes to the bottom of the window. Probably didn't win that one. Who took the long? Jose, is that the one that you took? Termination, full reversal, smalls breaking above, everything's above support. Comes right back to the window of opportunity and just doesn't work out. I love that trade. Love that trade. Just didn't work. All right, guys, I'm going to take a little break. Do you guys want to watch crude? Do you want to watch these guys try to figure it out on the NASDAQ? Or do you want to see what happens on the S&P? We'll leave it on the NASDAQ because it moves faster. It'll give you more to look at, right? There you go. If your rules are met, take a trade, guys. If they're not, sit on your hands. Relax for a little bit. It's cool. You can do that. If you have a question, when I come back, I want your question. So, Moon, if you have a question, I want to talk to you, right? Inzea58, I want to talk to you. Jude, if there's something that you want to talk about. Nubian Man, nice to see you in the room. If there's something you need help with, Tim, let me know. Guys, I'm here for you. I'll be back in a few minutes. Man, I wonder if they're going to sort themselves out. We'll see. Back in a minute, guys. All right, guys, I'm back. And Moon, you can do stocks, you can do anything. There's a different data that has to be had for stocks, and I don't remember what it is exactly. John Novak would definitely know, and if there's something, I know that he has it. If there is a stock that you're curious about, you can always reach out to John Novak too. He'll build a chart. He loves doing that. Guys, this is a termination that created a full reversal. This is a full reversal that provided odds favorable momentum. And this is odds favorable momentum that has me looking at an area of support inside of favorable large triggers. That is the basic recipe for a high probability trend trade.
Order canceled.
Pretty cool how quickly that happened, right? I'm talking to Moon and I'm reading my charts. That's when you know you're getting comfortable. One of the characteristics of the NASDAQ is these small triggers behave as resistance. So NASDAQ requires a level of patience. As we get back to the best area, if these small triggers are railing against you, NASDAQ traders, sit on your hands, don't fight them. Does that make sense? This is where NASDAQ and crude oil, this is where NASDAQ and the S&P differ. Is if you try to jump in against small triggers, more often than not, it's absolutely going to slaughter you. Gary, did you see it? Ziba, you saw it, right? So this lets you identify that 20 to 30%, guys. Termination, full reversal, odds favorable, everything is perfect. But these small triggers say, hey, guess what, Mark? Sit on your hands. This is likely to be one of the 20 to 30% that don't work. Who are my NASDAQ traders in here? Guys, this is one of the greatest lessons that I learned. And I'm not going to lie, it took me 8 weeks to learn it. It took me 8 weeks, Jeremy, to recognize this pattern. And I annotated, I can't tell you how many charts. If the smalls are strong against, wait for a close on the correct side. And this became this was my motto. This was my mantra. This is what I was saying every time it happened. And what I found is I started losing a lot less. A lot less. And what I started doing, Jeremy, is on my spreadsheet, I started a section called NASDAQery. I'll show you exactly what I mean. Let me do this real quick. Never fight smalls. All right. Here's one called entry patience. So everything is cranking, everything is odds favorable, everything is on its way down, and these small triggers come up strong. So what I'm doing is I'm waiting for the close on the correct side. And I got slipped a little bit on this one. But I'm getting in a little lower, right? Because I have a clear path, because I have momentum, because the rules are met. But see how it pulls down off that mid band, pretty much bounces right off of those strong small triggers, rails up just a little bit more, and then the close on the correct side takes me straight down to the promised land. And then the same thing here. If you're thinking about, well, this is gap theory, close on the correct side of the smalls. Yeah, waiting for the down bar. But for me, what I found is I've got a little more success just getting a close on the correct side. And here's that exact same picture, right? Coming down super strong. No reason to fight it. And for me, it has paid dividends. It has absolutely paid dividends because the NASDAQ has a little different personality. Let me get my 13.2 chart here real quick. Accidentally knocked that one out. So what it does for me, Jeremy, is check this out. If you were thinking that you were going to take a 50-50 trade, if divergence didn't keep you out, look at how the small triggers keep railing up, keep railing up, keep railing up. It becomes almost like a little bit of a safeguard there. And that's kind of the first step, I think, in NASDAQ that gives people a lot of extra, just a little extra advantage in there. And then if we come back to that trade that Safia took, Jeremy, you're comfortable with the gap theory, right? So NASDAQ people, this is another one where you can take that same idea, that same pattern recognition that we get. It's the last hour, guys. We're going to go a little advanced. And we're going to put this one in the NASDAQery section too. And this is a great one. Let me type it out so that you guys can steal it. If my small triggers are a full bar away and price reaches the area with the conditions for a trade met, I'll enter at the area. If the smalls create a bounce, I'll manage and then wait for the close on correct side if they are strong against. And you're going to see this a lot. You're going to see where those trigger lines, right here, I'm going to go break even off of those trigger lines. So when these trigger lines get reached all the way up here, a couple bars, I'm like, oh, if they act as resistance and push down, I'm going to wait for that best close. So what this does for me, and I'll put this in the room, is it helps me time my entries on the NASDAQ, because the NASDAQ's a different beast, guys. It's a little different. It's got a little different personality. Have you ever seen that, Jeremy, on the NASDAQ as you're trading it? And I'm going to put this one into the spreadsheet as well. So true story is I got my butt literally kicked 1,000 times fighting those small triggers. And I had to create that recognition on the patterns. And I'm not saying that you haven't done this, and I'm not saying that anybody in this room hasn't done it. But when I start losing trades a lot, I've got to stop taking them, and then I've got to go back and I've got to find 100 instances. And what I found is I started going back on the NASDAQ. And when the small triggers were strong in the direction, there it is. There's a potential entry that carries it down, right? And when they're strong in the direction, this becomes a horrible long trade. And when they're strong against, no reason to get in at that mid band. You see how that works? Over and over. It's freaking amazing. If you were thinking about getting in here, look at those strong triggers. So this became a little pattern recognition for me. That's the one we looked at where they were a full bar away when the conditions were met. Changed my NASDAQ trading 100%. So here we have a 50-50 with divergence, and your small triggers are up. Do you see it? And they're less than a full bar away. Can we activate the patience plan? Can we activate that, hey, I'm going to wait just a minute, Jeremy. I'm going to wait and see. If it's really going to go down, it'll slow down. And I also want that close on the correct side. I want it to happen somewhere near the area that I'm wanting to trade from. So as these small triggers come up, as they continue to push up, look at the bounce, right? And it's a 50-50 with divergence. But look at that. There's your bounce. There's a reversal bar on the other side of them. If this were going to be my trade, I could have a sell stop waiting at that reversal bar marker on the other side. That way I'm guaranteed that it's a close and not just a little fluctuation that head fakes me. Does that make sense? NASDAQ traders, and now look, it's so far beyond it.
Order
I don't want this trade anymore. But that idea of never fighting the small triggers on the NASDAQ has been wonderful for me. And I think it can be wonderful for you. And now what are we looking at? We're looking at a 50-50 that had divergence, that blew way beyond our rules-based entry. And now we kind of have to let it sort out, right? Now there's a huge gap between the two. The smalls are beginning to turn. The large are way above. And it becomes kind of a holding pattern. Is this area going to hold or is it not? I don't know yet. But if you waited for the close on the correct side and still took the short, you're making money. And it gets you all the way back to that decision point. So guys, that's a great NASDAQ lesson. And that's the lesson that I had to learn through repetition over and over. And I had to take a lot of losers. And silly me, I took a lot of losers on an Apex account rather than going to Simulator and testing it. So that's kind of the results of my findings. So when you guys recognize patterns, make sure you're taking a lot of pictures of them. Incorporate them into your plan. Great lesson today, right? Large chart says down, but large charts directly into termination conditions. The KISS plan kept you out of getting run over. And now we're just waiting to see what happens, right? If this area is going to break, it'll break. And if it breaks, well, then we'll wait for everything. This is my if then. If this area is going to break and the market's going to continue down, I'm going to let it break, right? I'm going to let everything agree with the trade. I'm going to let it get past this termination condition. And then I'll look for continuation down. But until that happens, I'm not going short. I'm not hoping that it breaks. Look at price react to fibs. I love it. Guys, I say it like I knew it was going to happen. It used to blow my mind when I would take a trade and John Novak would run the room and John Novak would say, all right, so now the expectation is that XYZ, and it was usually the opposite of what I had just done. And I'd get run over and I was so mad at him for his crystal ball, knowing where the market was likely to go. And then what I realized was that he had 20,000 pictures of trades, 20,000 pictures of patterns, right? Look at how price reacts. Do you see the indecision? One is down, one is up, divergence here, divergence there. And you guys don't have to get caught in this. That's about the best NASDAQ lesson I can give, guys. Now we have a pivot stop out. Now we have a second divergence. Now we have triggers rolling, but it's straight into fibs. Termination, no trade. Great recognition, Gary. Why would you? Why risk it? You guys will get to a point where you'll say, I have 17 things for continuation down, and I have 2 things against it. Debbie, there's your 50-50. Only one divergence. Perfect entry, manageable risk, all the way down to the 1-to-1s. Absolutely beautiful. Here the small smash through saying you had a chance. There's that good top coming in play, right? Everything's cranking down. And this was the first areas that good top was trying to break. Even more advantage. You take the quick momentum style, beautiful. Manage it aggressively. And then you take the 50-50 with one divergence because that resistance held and manage it beautifully. Debbie, great trading. I can't have strong trigger lines if trigger lines are flat, ladies and gentlemen. Once again, I have a 50-50 with divergence. You're watching the battle. You are watching the battle between buyers and sellers. Guys, what do you want to talk about? Flat triggers mean no momentum, guys. Plain and simple. Look at the bounce off the termination. Gary, great chart read. S&P is directly into support from a bad top. Sometimes you have to do nothing because there's nothing to do. It's very rare that the market does absolutely nothing forever, right? It's very rare that the market sits still and doesn't go up or down. I don't remember the last time I saw it go limit stop where it got so crazy that they had to shut down trading, but it's happened, usually in times of war. Otherwise, the market goes up and down. There's fluctuations all the time. There's upticks and downticks, and that's all there is, guys. And what we're going to do is wait until we get odds favorable momentum. And we're going to wait till all of our indicators agree. And when they do, we know we have a statistical advantage. And when we have a statistical advantage, we're going to take and manage the trade. You can't find it in Discord, Ziba. You will find today's lesson on the Nexgen page under live. And after class, John will post it on YouTube. Yeah, there's the link to it if you want to save it. Guys, all of them come through here. Oh, we're live right now, it appears. And we're on a little delay. Gosh, I sound ridiculous. How do you guys listen to me every day? So it's there, Ziba, and it's running live right now. So it'll be finalized and posted, and you'll be able to grab hold of it. Bad top, not a pivot stop out. Gary, why isn't this a pivot stop out? These are my favorite pictures because now we can go to the learning material and we can see why that's not a pivot stop out and why it's just a pivot. So Gary, this lesson's for you, my friend. When I go to termination conditions, one pivot that creates the line is a pivot with a loss of momentum. And this is a very common mistake, guys. And I love this lesson. I'm glad that you posted that picture. This is just a loss of momentum. Don't make it bigger than it is, right? But when price reaches that loss of momentum and the trigger lines remain above, this is what creates the pivot stop out. Here's your pivot. There's the stop out. So in order to have a pivot stop out, price would have to come back up to 81.08, exceed it by a couple ticks, and the trigger lines would have to remain below. Because a pivot stop out provides strength to the top, but just a pivot with a loss of momentum typically gets us back to the midband and support. Does that make sense, Gary? Still 50-50. There's those strong triggers, Jeremy. Should we see if we get a close on the correct side at the bottom of the window?
Order pending.
Just for grins. We have odds favorable. Everything's going up. We push to the bottom of my window of opportunity, but those triggers are strong. So I can put a stop order right at that reversal bar marker. If from this area right here I get a reversal bar to the upside, it closes on the correct side of the small triggers, at least then I've got an advantage, right? It lets me have my risk already established. And if it never happens, I'm not in the trade. So let's see if it happens. Let's have some fun with the live market, guys. And Ziba, this is the same lesson. We know the window of opportunity, But when the triggers are this strong, it creates challenges. Now my large triggers are against me and my small triggers are strong. But my large chart says yes. Do you know how to do it, Jeremy? Right click and it'll be buy stop, right? And look, it just blew through. Cancel that darn order. Once again, we've avoided a loser by respecting the strong small triggers. Jeremy, I think your trading's about to change a little bit. What do you think? Thanks for being in class today, man. A video of parabolic trading. What's parabolic trading? When the market is just trending one direction relentlessly? Yeah, those are great. There's a lot of traders that say, if it's going up, buy the mid-band till it stops working, right? And if it's going down, sell the mid-band until it stops working. And that's talking about times. This clearly isn't one of them. But I want to say this morning, there was a ginormous rundown, right? Even that's not, from here to here, 30 bars in the same direction, 3 areas broken. That's where a lot of people will recognize that the market is one-way railing, and they'll just keep taking those mid-bands until it stops working. And it will stop working, guys. But when it's absolutely railing, people will keep buying the mid-bands with that clear path until it stops working. And it creates opportunities, right? That may be one of those next level trades. No, Gary, no. Termination condition. No. And guys, this is why we don't talk about advanced stuff as much in this room, because you're brand new. And if I say, hey, here's a gun, don't point it at your foot and pull the trigger, 10 of you are going to point it at your foot and pull the damn trigger because you misunderstood the lesson, right? So Gary, when a market is trading, when the large chart, and let's go to the user guide because we'll talk about it now because I feel like we have to clarify. Ron, have a great day. When my large chart, and Jeremy, here's the lesson that's associated with it, and it comes straight from the momentum side of things. When the large chart is railing in the same direction, when the large chart is not hitting anything yet, you're going to see these small triggers on the large triggers, right? And everything's going to look like this on your large chart. And it is a one-way boogie. That market is just cranking. This is what we call that parabolic market. That oh my gosh, areas are breaking, everything's up. This is my look, and this is where people will buy mid-bands until it stops working. And there's the video Jeremy just posted. And Ziba, earlier you said, I feel like the market's going to go up, right? And it pushed all the way down to the lower areas. And now you say like you feel there will be a big move for momentum traders. And now it's jacked up, right? So Ziba, why not just say this is what's happening now, right? This is what's happening now. It either fits my rules or it doesn't.
Very strong trending. Parabolic markets require trading termination conditions on the 5-1 chart.
Jeremy, this is John putting together the video using an AI voice. So this is John on crude oil saying that when everything is cranking up, right? Everything is cranking up. He's looking for a mid-band and a close on the correct side to go with that parabolic market. That's all that was. Yeah, that was John. He was having fun with AI voices. But Ziba, and the reason I said that wasn't to knock down, but the reason I said that is that it's easy to start saying, I think this is going to happen. I think the market should do this. I think the market should go there. I think this, I think that. And that's okay. That's human nature, right? But for the average user, for the average mortal, it's so much easier to say, this is what the market's doing right now. Right now, the smalls are below, the large have turned. It's a 50-50 look, and look what the market's been doing. Look at this fight on the large chart. Do you want a 50-50 trade with divergence? And there's that small trigger's a full bar away. Let's see if they ask. Yeah, I know it might. In Ziva, I might win the lottery and never see you guys move. Yeah, and after the fight, there's a big move. But do you see how your thought was an incomplete thought for the room? It's like when people post in the room, short, and they don't give me any context, right? So absolutely, when the market's been trying to sort it out, whoever wins typically wins big. But we don't have any indication of who that might be. And Jeremy, here's this lesson again. It was a full bar away. Look how it came right to it. And then headed up. And then when it got to the mid band, it bounced off of it. And they haven't slowed down yet. No, don't shut up, Ziba. What I'm trying to do with this conversation is I'm trying to help everybody, not just you, realize that it's easy to try to make a decision of what the market may do, right? And I think it's important that you continue that process. It's important that you say the market may do this, the market may do that, but have it founded, right? Instead of saying the market may have a big run, because 20 people in this room thought that that might be it because the trend was down, right? And Ziva, in your head, you're like, this is a huge fight. I'm going to let them sort it out. And once they do, I'm making money. So I like the complete thoughts. The same reason that I love to see pictures come with the questions so that we can see exactly what you're talking about. And I only bring this up because that's what I used to do. Is John Novak would say, all right, we have a trend trade setting up, probably. And I would take the first thing that I thought was a trend trade, and then he'd go, yep. And notice how we knew this one was going to fail, and it's going the other direction. And I'm like, son of a gun, I just lost a trade. So incomplete thoughts in the room can be a little dangerous. And Ziva, check it out. They're trying again. The buyers are trying again. Your large triggers are different than mine? All right, hold on. Let me make sure that I have the right template. Sometimes I get in a groove and I put the 13.2 template on. Or maybe, Chris, I'm using a different template than you. Are you on 8? And are you using the Nexgen template? Or did you build one? Sometimes what happens, Chris, is you'll go through and you'll reload. No, those are the right ones. You're on 7. Right click. A lot of times if you ever have to reload a template, it defaults to the 13.2. And Chris, you've been with us long enough that you may inadvertently click on the 13.2. I know that I did that once in class and I was like, I'm so off. But there's the NASDAQ 34.5 for your large chart. Make sure that that's your template. And then the same thing on your 13.2. Make sure that it's not just the 13.2 template, but it's the NASDAQ 13.2. And that'll make your NASDAQ 13.2 look like a typical 5-1. 50-50, no divergence. There's strong trigger lines. So, and Chris, do you have the NASDAQ templates for 7? Just in case, here's a zip file with them in there. So that'll be your NASDAQ templates. And guys, once again, strong trigger lines. Spoil the party. So Chris, there's a zip file. That'll be the NASDAQ 13.2 and 34.5. And that'll help you out, and that'll get us consistent. Small triggers for the win again, guys. NASDAQ is trying so hard to make something happen. Nope, no trades, guys. Debbie, have an awesome afternoon. It's nice to see you back in here. Trading is like having children. Sometimes the answer is no. Can I go long here? No, your rules aren't met. Can I go short here? No, your rules aren't met. Do I have an advantage here? No. The triggers are too strong. But when the answer is yes, guys, capitalize. Learn the patterns for when the answer is yes. Look at the bounce that the termination created. Kills your trade. Rule number 2, guys. I love rule number 2. And there's that momentum trade. Jose, did you get it? Did you take that one? Maybe not into the termination. Everything says down. There's that pull back to the 1-to-1s that Jose caught earlier. No, because it was right into a fib, right? And we just don't know if it's going to break. And it's from a bad top. I love it. See how the look is the same, but the conditions are different? That's chart reading, guys. A mobile version. He's actually working on that, Safia. You know that, right? He's creating a browser version so you guys can take your iPad and sit on a bus and drive across the country and still make money. I'm excited for it. He's got programmers working around. My brother's dropped at least probably $750,000 of his money into it. It's going to be awesome. Gonna be awesome. So, guys, this is a great class today. Lot of wonderful lessons. Lot of advantages. Lot of patterns. I hope you got something out of it. And what I really hope. No, Tony, that is pretty remedial, right? I wait for a close on the correct side at the spot. Not just any arbitrary close above. Like, I'm not taking this close above because everything says down. But if, let me just find a hypothetical here real quick. And because it's been range bound, it hasn't been the best for hypotheticals. So here we go. Let's say that I have a challenge, right? And I know that my target's way down here. And this is really too low. I don't care for it. And the triggers start coming up strong. You can see how they bounce on it. I might wait for this close below. I prefer that it's at the areas that I'm trading from. This is a good example. Maybe this is the perfect short trade. Hypothetically, we don't fight them, we don't fight them, we don't fight them. There's your close and go. Does that make sense, Tony? If this were the bottom of the window and this were the top of the window, don't fight them, don't fight them, don't fight them, don't fight them, go. And it just gives you that little statistical advantage, that little bit of, all right, here we go. And there they are, a full bar away. And it takes you up. So, guys, remember, NASDAQ's a different animal. I'll talk about it every day. That's the only market that I trade is the NASDAQ. I don't trade crude oil anymore. I don't trade the S&P anymore. I feel like the NASDAQ provides enough opportunities. I don't need to. Today was great. Today was chart reading. Today you guys get to realize that you're not stuck in one place. Just get really good in one place. They are, Jeremy. Just get really good at that one place before you try to jump to the next one. And it'll help you out, guys. It'll help you with focus and clarity. Bring me every picture that you take and let me help you with a little analysis. If you're struggling, if you're not consistent, bring me your pictures. Guys, talk to me. Nobody here, with a few exceptions, has met anybody here, guys. Safia is not going to bump into me in the grocery store and go, oh my God, you're that guy that took the stupid trade, right? Probably not going to happen. Unless I go visit my brother in Sarasota and bump into her in the grocery store and she goes, "Oh my gosh, you have a voice built for radio. You're in Tampa? Okay, well then, see, no chance. I don't even fly into Tampa anymore. Never going to happen." But, Jeremy P., so you and I may bump into each other at one point, right? May see you at the beach. The likelihood is slim. But if it does happen, we'll laugh about the mistakes that we made, and we'll laugh about the growth that we had, and we'll laugh about the money that we're making when we stick to that plan. That's my goal, guys, every day. I love teaching this class. I love all your questions. I value the input. It makes me a better trader. We're going to come back tomorrow morning, and we're going to do it again, the exact same thing. We'll all meet up in Sarasota. Guys, I think I'm going to fly into Sarasota October, November. So it's cool enough to golf. We'll do the Nexgen golfing tournament or something. It'll be fun. 3 divergences from a termination. Holy smokes. Pretty crazy, right? Guys, have an awesome afternoon.